I will be uploading this PowerPoint. I have 2 more slides and 1 more video to finish. And then it's going to be like a series of the market profile videos. So you guys will have, obviously this class is going to cover it all. My goal is to build this market profile, and it's going to have 4 videos, right? And it's going to have the breakdown and the setup. I am not. That's correct. Yeah, we're back in streamer mode. It's just it cuts off the names. I don't know why it does that. I hate, like, I see only MSC on the names in the chat. So I switched back. That'd be good, man, because I think that would be big help. Yeah, that'd be great. Uh, so the idea is to actually build up this PowerPoint, and I'll embed the videos in here where you guys can go watch it, right, and follow along at least to see, because sometimes it's really difficult. Everything that processes through my brain or a lot of traders' brains to spit it out immediately, and I try to do that during lives, but then it's the memory on the levels and the setups that really makes a difference for the most part when you're trading. And I think I'll cover a lot of that along with the psychology side of the things as you guys are trading. So I'm looking to finish basically complete this by June 1st and give you guys a market profile Bible for all of you in the Discord. And I would have, I just contacted the legacy box that basically is converting my training. If you guys recall the Peter Stadelmeyer audio training from the floor trading that was conducted, I have those tapes and I sent them, and they just sent me an email actually yesterday that they had too many audio tapes being converted, and then mine is next in line. So I'm expecting to have that back. So you would have the market profile with the videos, and then I would embed the audio tapes. And only people in the Discord are going to get the audio tapes from Peter, because it's going to take a while. Guess nobody else has it. Nobody has those tapes currently, so you guys will be exposed to them. And for the most part, I'm going to amend the record, right? When you guys sign up, it's going to say that if you do share those audio tapes, that you will have a lawsuit by somebody. So I'm looking to make sure that people that are here get the best value out of it, and having those audio tapes where you guys can listen to the guy that actually came up with market profile and that conducted the training on the floor for CBOE floor traders would be something in your ammo, and you would have it for trading, guys. Not many people have access to that. And I'm probably one of the few that actually has the tapes. So we'll start with that, and then let's go into market profile, and then we'll at the end do the stock scan search. So we're going to cover this and then go into the details on finding some stocks. There's some decent setups, right, on the stocks that I've been looking for. So we'll go over that as well. So with that being said, market auction theory, market profile, they kind of go hand in hand. We're not going to spend a lot of time in market auction theory. We did a class, I believe, either last week or a week prior that covered the auction in details, and I suggest that you guys watch that. A lot of traders that are new to trading, you can believe in your EMAs, SMAs, or whatever the hell you want to believe as a lagging indicator. But really, once you understand how the market is auctioning higher or lower in search of buyers or sellers,
I'm good. Thank you. Put it on the counter.
it will be much easier for you to trade once you accept.
Just put it.
Somebody go on mute, please. The idea of price being either accepted or okay, guys, somebody please go on mute. All right. Okay. So market is basically a two-way auction, guys. It's what's valuable to one person, might not be valuable to another, and that's how you have to treat it. When you think about prices of the stock market, we trade, futures. I trade SPX buy. I trade options as well. But you need to determine, right, where are the buyers, where are the sellers, and what is value, right? We go, I'm really big on value and acceptance and rejections and trading off of them. What's valuable to me might not be valuable to you. And besides trading as well, some people value driving Lambos. Even if I had $1 trillion, I would probably not buy it. I would not buy it. There's no probably. I would not buy it. because I don't value that, and that's not what my value is in life, to drive a car that you still have to go 60 miles an hour on a highway illegally. And that's just me, right? Some of you guys might have a different opinion and different value, and you're like, oh man, I'll just go to jail. I'll gotta drive 130 miles an hour and put myself in danger. And that's valuable to you, right? Those are the different things and opinions. And in the market, right, you have traders that find value for a day, and then you have traders that are buying, let's say, intraday value area high, yesterday's value area high, might be cheap for him or her. And the fact of the matter is that maybe they're buying there and they're going to hold it for, I don't know, 20 years on the contracts, right? Or the long position. Markets always go up. If you go back on a level, they have the dips, but they eventually auction higher, right? So you have those type of things that you have to consider when you're trading. You cannot have a bias that, man, I believe it's, cheap here and I'm going to buy it. And then as soon as it goes lower, you're like, man, market hates me and market's, against me. Market doesn't care about you or anyone. It's just a two-way auction that people play on. Either you're part of the 51% or the 49. At the end, it's a zero-sum game. Okay. The objective is to facilitate the trade, guys, and then you have the locals, the dealers in between, that basically take the bids, then the offers, and the highest bid and the lowest offers, and they match them, and you create transactions. There's no concept of more buyers or sellers. So if you're new, you need to quickly erase that out of your brain. There's never more buyers or sellers. Please don't ever get that confused, because that makes no fucking sense. Excuse my language, but I'm tired of seeing people that now teach market profile, supply and demand, and they say there's more buyers at the demand. You cannot buy something if somebody's not selling something, and you cannot sell something if you don't have a buyer for it. Just go test it. Go to a guy that's selling a car and be like, man, I'll buy 2 of these cars. And pay him for 2, but you'll get 1 physical car, right? I mean, he wouldn't mind, but you're going to be an idiot. That does not work. Same thing in the stock market. You cannot buy, you see Apple doing the buybacks. If they don't have the number of shares outstanding, how can you buy it? You can't. I mean, there's other ways of borrowing and whatnot, but typically you can't. The buyer matches a seller, and that's how the execution is, set up. The markets is, when you think about, when you look at a chart, it goes between balance to imbalance to balance. Rarely do markets go from trending higher to bearish markets, right? They typically like to consolidate, right? Lately on ES, at least, we've done, we reached new all-time highs at 5332, and then we left a poor high there. We came back. Now we're in a weird spot, right? We're in a 3-week balance. We kind of broke above it, but not really, right? There's not a lot of confidence. So markets go between, trending higher highs, higher lows. They go to, lower highs and higher lows, indicating consolidation or a balance, right? A balance is just equal term for, consolidation. So the price is not making new highs or not making new lows. It's just staying there. And, the dealers actually love when the price is in a balance, because they like seeing a lot of transactions, and they're able to protect themselves and hedge against it much easier, right? When the market's trending, the reward increases, but so does the risk of trading. Keep in mind that the last bullet, the price, your job is to look for price being accepted or rejected, and you want to be stepping in with the majority at the major levels, and we'll cover that shortly here. So balanced markets, I'm just giving you an illustration, right? So balanced markets, we're just balancing here. Once we break above that balance, let's say this range that you're in here, this is your markup or imbalance, right? That means we're trending away from here. We're no longer agreed that this is a fair price. We go higher. Typically, what you want to look for is you would have an imbalance candle here, probably making some really aggressive buyers stepping in to get away from this value here. And then when they come back for it, that's a key point, right? Either they're going to accept this, and there's a high chance you're going to be putting in new highs and breaking where the last peak was. Or if you fall back inside, that's really bearish, means you're rejecting the prices higher, and they're typically go back and they search the POC of that area, and then also the value area low, to find in the new buyers and see if the existing buyers that we had, which would be responsible buyers at this point, are they there? If they're not there, then you get initiative sellers, and then you're going to proceed lower and so on. Okay. Does everybody understand this concept?
Yes. Yeah, sure.
Right.
Yeah.
Acceptance, rejection, you have to get familiar with, because price is either accepted or rejected. That's all you have to keep putting in your head. Bracketed markets, that's balanced markets, right? That means the buyers and sellers are agreeing on price. So if you think about, recent economical changes and macro picture, right? Somebody just posted in our Discord a picture of Formula One prices of empanadas, right? Let's say, you get free tickets to go to F1. How many of you are willing to pay $290 for 4 empanadas? So you guys don't want empanadas?
Bit expensive for
Not
me.
at that price.
I mean, it's simple, right? So you have a perceived perception of empanadas. How many of you would pay $10 for 4 empanadas?
Sounds better.
I would probably, even if I didn't know the 290 price was there, I'd buy it. I mean, you're in at an event, you're getting food, sure. Even $20, I'd probably pay it. But $290, that seems it's advantageous only to one side, and that side would be the sellers. Sellers get attracted when prices are what? When do sellers get attracted?
Hi.
When the prices are high, you get a bunch of sellers. Because I'd sell you 4 empanadas for $300 all day. I don't even have to make a lot of empanadas to make a really comfortable living. But when the markets are balanced, let's say now they're like, oh man, we had a lot of inventory of empanadas and we could sell them for $990. Well, most likely that they're going to have to lower the price slowly and see if there's any buyers for those empanadas, right? Instead of selling for $290, they have to drop it to $250, $200 maybe. And if there's no buyers for empanadas, maybe they have to bring it back to a rational price level where the buyers are sitting. And we just, kind of tested it at $10 to $20, we would have buyers. So that in your bracketed markets, when we look above those extremes in bracketed markets, usually you get something called single prints, which most of you will know by the end of this class. You get aggressive sellers that take their opportunity to sell to you the empanadas at $290. As soon as you step in, it's like, hey, do you have empanadas? They're gonna be like, yep, here you go, 4, I got you. Just swipe your card. They do it quickly, so that way that the price that they're selling or the price they're buying, let's say below the value, they don't want to spend a lot of time there. And that's the same in bracketed markets. We can sweep the highs. It doesn't mean you're going to build value there. They just sweep, let's say, the bracketed high, and then they go back in balance, and then they continue trading, buy the bottoms, short the tops. That's your brackets. And bracketed markets, in my opinion, are more of an art than, like something scientific and something that you can find. Everybody can find the same bracket. Well, if you're on a weekly and you're looking for brackets, you might have a different bracket than what I'm looking at. I might be looking at daily bracket or 4-day bracket. So you have to look at the, zoom out, go to monthlies, go to weeklies, dailies, 4 hours, 30 minutes, and so on, depending on what type of trader you are. If you're a trader that's scalping, you have no business being on the monthly consolidations and looking for brackets on the monthly. It's useless for you. You're just wasting time. And bracket market have a different strategy in trading than trending markets. And hopefully you guys can conceptualize that without me explaining into details what that means, right? If I'm trending the market, let's say higher, right, and we are framing up, I'm not necessarily looking for short opportunities. My goal now is to switch and look for buying opportunities where the risk and reward is a little bit higher than in the bracketed markets. Bracketed markets have limited risk and reward. But, if it's limited risk, it's limited reward. And in the trending market, once you break certain levels, things open up. You have more reward, but also you can carry more risk because now you might reach those levels where the sellers are sitting and looking to take advantageous pricing, and hence why we do multi-time frame analysis, is to know where they can step in. And you guys will probably enjoy the next couple of slides where we kind of deep dive into the favorite setups. Okay. Next slide that you guys can overlay with the previous slide here is this slide, right? It's really important that if somebody was to ask you this in the middle of the night, that you guys can visualize and understand what's happening. In, let's say, bracketed markets and balancing markets, right? if you're ranging, or even if the IB, initial balance, is set, and they're trying to break the extension on initial balance, that would be it's selling below, and they're basically initiating lower. If they're buying above, let's say, initial balance, which is 0.2 here, that means we would be what? Initiating buying opportunities, right? Let me just see if I can have a little laser. So that would be here, right? If you're buying above, you're initiating. If you're in a bracket, let's say, and on a 2-day bracket, and we peak above the value area high of that or range, and then we fall back inside, that means the price is rejected. There was responsive sellers there. Until these guys are gone, we're not going to auction higher. And then we target the opposite. Is anyone, excuse me, that's not following this diagram and how it correlates to our trading? New people, this is your chance to learn. So you don't shy away from questions. Nobody knows you. Nobody cares if you ask questions. Okay. You always want to buy below value. And if opportunity is there to sell above value, you want to sell something above the value on the time frame that you're trading. What is common, right? What is expected? When we're in a bracket and the price dips lower below the value, what is expected?
More buying.
If it's in a
Other
bracket,
time
it-
frame buyers.
Usually a defense.
Well, you know, if something goes below value,
If-
the human response is to buy. That's expected, right? And if something goes above the value, like if it's above the value, what is that? Is that expected or unexpected? Let's say you inherited something from your grandma or grandparents, and it's a picture, and you take it to let's say, some kind of auction, and they're like, yeah, that picture's $2.5 million. I know you love your grandparents and everything, but you just got that picture out of the shed. What do you do?
Sorry, Grandma.
You
Yeah.
kiss your
So-
grandma, you point to the sky, you say, thank you, Grandma, for this awesome picture. And you're selling this above any value because, you know, I wasn't lucky enough to have grandparents that left any pictures for me in the shed that are worth that much. So the idea is, if something comes in and it's priced above what you perceived as value, for instance, somebody offers $2.5 million for a picture you had in a shed, you get that picture out, right? And you want to sell it as quickly as possible. Take that check that they give you and cash it and make that money disappear from your bank accounts. Open a couple of bank accounts so you're at least insured, or invest it, right? So you want to sell when it's advantageous for you to sell. You want to sell. If the same picture, you went to the auction shop and they're like, man, $5. Me personally, I'd rather burn it than sell it for $5. Or you just put it back in the shed, right? Because it gives you a great value memory of your grandparents, the picture that you got, right? So those are the ideas that also occur in the stock market. And us as traders, we need to look at profiles, and we need to look at the value areas and how's the price trading in between those value areas. Are the buyers stepping in? Are the sellers stepping in when we go above and below? And that eventually will give you a picture on how do you trade it. If you see the value is shifting, you know, value area high is lower high, value area low is lower low, and POC shifting down, then most likely we're framing down in terms of values. And that can tell you also the trend. How strong is the trend, or, you know, up or down? If you have no overlap between values, as you're going down, that's pretty sustainable selling. They're really getting rid of it, and, you know, there's no buying in place just yet. If you're trending down and then the values start overlapping a little bit, you know, value area high compared to previous days starts creeping in, those are, you know, signs of an auction, you know, slowing down. And if the auction is slowing down, those are one of the key components when we measure directional performance, is the value placement, the value area width, and then the volume, right? If you see the volume that we are selling is slowing down, the values are overlapping, and let's say, you know, value overlap is occurring with the wider value area, well, you have a lot of things to consider, because that auction down is slowing down. Then there's things that you look for, right? Is it a completed auction on the bottom on a daily? If it is, it might be a trend reversal, right? if it had a poor low, poor high. Those are the things the market profile generates in terms of information. So that way you can rationally say, hey, we're trending, we're slowing down, auction is complete. We never went below this completed auction. There's probably found some buyers, especially let's say if you have a really aggressive single buying tail on the bottom, like access low. Well, those are all the signs that the market's giving you, and it's saying, hey, look at me, I'm done here. And what most people do, and why most people fail, is they ignore that. Something comes into your head on your right or left shoulder and it's like catching rockets, short it here at the lows. And I'm not saying rockets does it, but you will do that because you stop believing in what you're seeing, and then some kind of intuition or something steps in and like kind of clouds your thinking. And the only way you guys can get rid of that is to really look at the data and write down your daily plans. Hence, we do the watch lists and market updates, to create the habits for you guys. I honestly don't need to get on for 30 minutes a night to help you guys do this. I do it so you guys start creating the habits yourself. You need to find that 30 minutes to do the analysis that we are going over. Where's the value? Are we shifting lower? Are we slowing down? How's the value? Placement, the width of the value, and how's the volume itself. Those components really will help you, because as you progress through this class, you will see how all of them play out in a single setup. And I found one setup that literally had a lot of it involved, and it built up a lot. So we'll get there soon. Okay. I think most of you guys don't care for this. I already covered it. Peter invented this. The outer training, I'm waiting, like I said, for these tapes to come in, and you guys will be the first ones to hear them. And I think it will really make some concrete knowledge for all of you to actually use it into your trading, and eventually on the path to become profitable and a little bit more freedom in life than a lingering W2 over your head. Okay. I think most of this is fairly common knowledge, right? The auction process is there to find where the value is, and there's only 3 components that we need. There's a lot of strategies that have come out, I would say, in the past, I don't know, especially since AMC and the GME fiasco that we had. I've heard of ICT, not sure what it stands for, but I know the letters. Then I've heard of there's a smart money concepts, SMT. Then the other day I got messaged by one of our members that she's now trading. I forgot that one. I forgot the name of it. She is trade. I'll just bring it up, see if anyone rings a bell, so that way we can make sure it's real. It was actually on Twitter. Like DFXX or something, a setup, and I'm like, okay, well, I'm really not sure. Oh, DTFX. And I'm like, okay, that sounds like amazing. And if it works for you, if you can get behind the strategy and make it advantageous to you, being profitable is the only advantageous thing you have from a strategy, then keep doing it, right? But the market actually never changed. There was price, time, and volume. You can do whatever you want. You can call it fair value gap or an imbalance, right? And the real terms of price, time, and volume. But the only thing that's going to dictate where the buyers are, and the opportunity is these 3 components. Price is basically your discovery tool. And I'm not sure how many times I have said this, and I will keep saying it. You do not want to be the price discovery. You do not want to conduct price discovery in bracketed markets. You don't want to be the first one to click buy when we're breaking that range. That's a lot of momentum traders, and just ask them how are they doing in terms of momentum trading like that. If they're smart and really, let's say, disciplined traders, they can make a living from it. But think about where you're buying. Let's say you're buying this breakout that we just had from 3-week balance. You broke that high. Well, on Friday, basically you spent 4 hours in that breakout praying that we pop again so you can make some money. But when the opportunities were there, and for a little bit of time at the 42 to 38 level, did they buy there? Did you buy below the value of the 3 weeks? Probably not, right? And that's what I will be able to help you learn. You'll be able to see it as it's happening, and you will use the market generated information to kind of confirm your bias, confirm your entries using price, time, TPO, right? Time is there just to regulate your opportunities. How many times have you seen the price come to a level and literally rocket from the level, not leaving anyone opportunity to get in? Did you guys see it just recently at 42.38 level? At 50.38, 50.42?
It's seen it a lot lately.
Yeah.
We've seen it explode. I mean, I believe we closed at 51, maybe 50s, 60s. That's 120 points move from the level that we anticipated a bounce from. I remember clearly in the watch list. Now I'll pin the watch list where I said we're not bearish here. I said we're in a 2-week balance, setting up for a 3-week balance. You're not bearish at this point. You're looking for long opportunities. How many traders were looking for short there? All the momentum traders look for short. And what did they do? They just tapped the level below, and then they trapped them, and then they exploded much higher. And I even covered that point where we'll basically trigger the shorts to get in, and then they're going to squeeze them out, and it's going to cause a short cover rally. And then we had the NFP. I said that's binary. We don't know how it's going to respond. We had the levels, and they proceeded. So they used the short cover rally along with binary event. The market digested and produced higher prices. So you can call it manipulation, but when you look at the technicals were telling you there's no reward for being short. Okay, and that was your time aspect. If you missed the opportunity to go, let's say my first entry was like 38.25, second one was 40 something, I believe 42. If you missed those opportunities, you did not get that price again. So time is there to regulate, what do you have in terms of opportunity, but it also, right, regulates how market is open and closed between 9:30 and 4 or 4:15 if you want to care for settle price. Volume is to me is a key component, right? And a lot of discussions go, which one do you use? TPO or volume? Well, how can I make a difference if all three of them are making something that I care for, which creates value? Price, time plus volume equals value. And a lot of you need to stop thinking which one is better. I need them all. Like I need to look at the information that's being generated by market profile and volume profile. Market profile gives me a little bit more clearer picture on, let's say, where the single prints are. In volume profile, sometimes you can see the LVN, but you don't know where exactly is it single prints TPOs. So when I use the both, I'm able to kind of combine it, right, to make my decisions. Should you use RTH or ETH? TPO, use RTH for volume profile. You can use ETH. Lately, just go back and test it. Go download the data, look at it. There's not a lot of volume happening in Euro sessions and Asia sessions on our markets. So you can use RTH for volume, but make that distinction and run with that. Don't switch one day, don't confuse yourself and your trading. If you want to be RTH all the way, then go for it. Use RTH for TPO and volume. The only reason I use ETH sometimes a volume is if I see, quarter end, there's a lot of volume orders coming in after hours. I want to know how that order or that volume node that they're building is going to react in the future. And that's about it. Okay. So a lot of you also trade setups based on, man, we are too high, we are too low. You know how much market thinks or cares about your opinion if the market's too high or too low? Zero. It does not care about you as an individual and what your opinion is. It cares about orders and where the buyers or sellers are. So on the basics of market profile, I was supposed to recreate the slide, but I thought it was actually pretty clear in terms of everything that we needed to cover on the basics of the graphical representation of a candle, okay, or a day. So what you're seeing here, and this is really important for new people to understand this, because from this slide, you're going to learn. This is almost like your 1 + 1 = 2, and then you learn, a little bit more math in your life as you progress through the classes, right? So this is your basics here, okay? So if you're confused on this slide, we cannot move forward. you need to understand this slide, all the points of this slide. So value area in terms of market or volume profile is based on a bell curve. Why we care about value area is few reasons. We know that the first standard deviation, right, 34.1 to the left, 34 point to the right. When you add them up, you get 68%, right? That's why we use the value area. Where 68% of the time did we spend either time or volume, right? So if you're spending a lot of time at something, right, you value it. And I'm pretty sure if I was to ask you guys examples in your life, you could find it, right? If you have kids, why do you take your kids to karate every day? You would have Rockets. Why do you take your kid to Muay Thai? I mean, everyday lessons. Why do you pay for it? Think rationally. Don't give me that crap. I know you're smarter than that. Yep. And that's what perception of value is for Rockets, for his kid. He takes him there because he gets value out of it, not directly to himself, but the peace of mind, let's say. He knows if he was to get attacked, probably those kids would not bode well for them to, mess with that ninja that he has. And at the same time, let's say for a mother, right, if you're to ask Rocket's wife, I'm pretty sure the answer would be slightly different. It would be the peace of mind, but it's also, if he's going to be a disciplined child, if he's going to behave well, then if, let's say, you ask another person in his family, it might be like, oh man, his coordination, his sports abilities, different values are going to be derived from the different people that you ask. So in this place, right, Rockets is exchanging money for value that he gets from karate, right? And if Rocket spends 3 hours at these karate or Muay Thai classes, right, that's a lot of time that he's spending when you think about a day breakdown, right? So that place is valuable to his family. And same as in trading. If we are spending, let's say, a lot of time right here, this is the value area right here. Let me just erase this right here. If this is our value area high right here, and this is our value area low, we are accepting prices here, right? And if there's a lot of TPOs that, let's say, are below the POC, do you guys think that's bullish or bearish? Let's say POC was here and a lot of TPO we spent, a lot of time TPO periods are below POC. Is that bullish or bearish? Bearish, correct, because you're accepting and spending time and prices at the lower levels. So if the POC was there and now the price navigated away from it, it's bearish, right? But if you start building prices lower like you did here, this is your extreme. This is your value area high, and this is your value area low. And this is 68% of the time. And we also measure this in volume profile. So this becomes a very important zone. If you go above this level, right, you're looking to see how do you conduct that? Is it single prints? Is it, are you struggling to build value above this or below? Here you would expect, like we saw on previous live, responsive buyers to come in dependent on the previous day profile. If you crack below, that's unexpected behavior. That would be initiative selling, and that's typically not expected unless you're in a trending down markets. Okay, so any questions on value and how this is derived? This is just on TPO. It's 68% of the time price spent in this zone. On volume profile, 68% of the volume was spent here. Any confusion on this? Because I will cover this piece by piece. I'm very excited that you guys don't have it because there's an updated quiz for all of you. So I'm super excited to see you guys all pass. Then when you see market profile, you guys will see a bunch of letters, right? Sometimes you don't need to see the letters. You can enable and disable these letters in different platforms. But A period simply means what?
The start.
The first hour market's open.
30
It means
minutes, right?
The
9,
first third.
9:30 to 10 o'clock. So if you're to
Like
go
30
on your
minutes.
chart and you change the, the time interval to change it to 30 minutes, that's your A period from 9:30 to 10. Then the B period would be from 10 to 10:30, and here are all of your periods listed out. So don't let, some of you guys probably freak out, man, when you see a bunch of letters. It's just a graphical representation of what the chart is doing, because you'll be able to, and later on, once you get really good, you actually don't even need to see. You can just eventually, if you're able to visualize this and become really artsy, you don't even need to see the market profile. You can use the candles and you will know where the single tails are, single prints, where's the axis, where's the poor high or poor low. You should be able to relate that to candles, regular Japanese candlesticks, right? But in the meantime, let's teach you this so you can actually, this is the easy part, like the TPOs. I remember when I first started teaching this, a lot of you guys were, you guys were so overwhelmed and you believed that you will never learn it. How many of you felt like that and now you're like, man, this is easy? Is there anyone?
Yeah, I do remember it. It looks like it's way more than it is. I remember feeling that.
Yeah, I mean, it is fairly simple. You just have to, give it time here. A and B period create something called initial balance. This right here. And it's important because there's a setup that we play in initial balance, and initial balance is fairly important to trading. It's the first 1 hour of trading on cash session. Then you have initial balance high. That's the high of A or B period, right? It would be the top, and initial balance low would be the bottom, right? And most of the time, all your trading platforms are going to have a way to indicate that on market profile. Do you guys know where that is on this profile here, for instance? I'll show it live, but I just want to know if anyone knows.
I don't. I use a separate indicator. I didn't know you could get it here.
Look at this black line here.
Oh,
Right?
Yeah.
So there's your B period high and there's your A period low. There's no B's or A's below here, and there's no B's or A's above here. So therefore, usually indicators will have like a line or some kind of shading on the side of the TPO, right? That indicate that. And that's how you can tell, right? So just a tip, right? So this is your initial balance, and extensions of initial balance are fairly important. We'll get to that once we establish the basic knowledge. Something called the midpoint, and this is important for the day priors, right? So let's say this is a close of Friday and we closed in a B shape, which we didn't. Let's say this was, a midpoint here. I typically just highlight the box where it says the midpoint. You can find the level, but I would just draw a little point, especially on weekly and monthly halfbacks. I care for those a little bit more, right? If you're, let's say we've been trending up since October, we actually only tested the weekly halfback 4 times in 26 weeks. And every time we tested the weekly halfback, what do you guys think happened?
Either
we
bounced
bounced up.
or
They
rejected.
bounced up. They bounced
Bounced
up and
up.
they continue
Yeah.
higher. So they're telling you we're not finding any value discount trading below the 50% of the previous week. We are eager to go now, buy. So
Not
you can
yet.
you can use those levels to determine, right? Especially if you're in a strong trend and they're not letting up of that 50% or halfback or midpoint. That's a bullish sign. And same is true on the flip side. If you're trending down and you can kind of analyze it yourself and see if we come there, right? Are we defending the halfback? That's your midpoint here. So just to value area, the bell curve, we covered a midpoint, right? We covered the initial balance, which is here, which is your A and B periods, A plus B, 30, 30, 60 minutes. Now we're going to cover the axis, single prints, and poor high and poor low. Okay. This is fairly important that you guys know. So does everybody understand what it means to have like letters next to each other? Like here you have a letter D and letter H. New people, do you know what that, like, why is that there?
price traded there in those 2 30-minute periods.
That's correct. In 2 periods, price hit at those levels. So H period would be when? Between 1 and 1:30, price touched this level right here. Let's say this is $10. It traded at that point, so it basically puts a letter H there because it touched that level. If the next period, H period, trades at $9, let's say below here, it's going to put a letter H, and that's what it means. When you have only one period, let's say I believe this is E period here, and it's more than 2 TPOs long. So this is 1, 2, 3 TPOs long, okay? This means that it has access high. It has a unfair high here, means the auction completed here correctly. That we sold everything that we could sell in terms of inventory here, and no more buyers were able to push forward. That there was a lot of inventory to sell here. The longer the TPOs, and it has to be longer than 2 TPOs to be considered access on the top or on the bottom. Okay. If it's more than 2 TPO periods, like here, that's considered what? Is that a poor high or access high?
That's a poor high.
This will be access. 2 or more is access. Is it an aggressive access? No. But once you start increasing these, right, access, let's say 10, 15 or 5, 6, those become other time frame participants that are really aggressive at that level. So 2 or more TPOs means auction completed properly. Okay. Well, now, if this is a completed properly, how would you determine if the auction did not complete properly using TPO?
There's a bunch at the bottom, or more than one at the bottom.
So something like this. You have periods of, let's say, P, can't tell, U and the V. So so here, if you have 2 or more TPOs that are next to each other, like a low square here and here, that means the auction did not complete properly, and this would be called poor low. If it occurs on the top, if we had a square here, this would be called poor high. And I'm not giving you this just so you guys, you learn this, but there are setups that you can play for this. There's indications on how they can trap you on poor highs, poor lows. And you guys just had one that occurred recently if you analyze the market properly. Okay. So far, value area. Is anyone confused on value area, what that is? What is value area high? Anyone confused?
I had a question about what if it was just one TPO at the top or bottom?
That's poor high, poor low. It has to be 2 or more. Good question. That's poor high or poor low.
Got it.
And why do we care about poor highs and poor lows since we're on it?
They're the extremes.
No, poor high or poor low.
Finished business?
Say it again.
Unfinished business. So basically,
Yes.
Price is likely to test it again.
That's correct. So read here. That's exactly right. When you have a poor high, that means that not all the selling that was there occurred, and we didn't get a single winner on the buying side. It's just as if you guys recall, when we auctioned $100 bill, and we could, for the purposes of demonstration, I'll auction $20 bill right here right now. Who wants to buy $20 bill?
I'll start at $1.
Okay.
I'll do 2.
I bid 3.
I'll take it 4.
I'll
10.
give you 10.
I'll do 13.
$13 going once. Nobody else.
$19.99.
Okay. Anyone want to bid 20? Okay. Most likely the auction would be completed and we would have a buyer that he would walk away with the $20 bill, saving a penny. Right? And that's where the auction is done. And typically when the auction is complete, you're going to auction in the opposite direction. When you have a poor high, let's say like this, what they like to do, and I will give you a few examples live. once I find this, is they dip below, and that's called repair or fix. They fix this to find that final buyer, right? Let's say some of you is like, man, it's Shorty's $20 bill. It's worth more for some reason. And you're like, man, I'll give you $25. I'll be really happy to sell that to you at $25.
Hey, if it was signed, man.
I will sign them. I will even put the logo of Einstein on the dollar bill. For $20. So it would be advantageous for me to sell, but that auction would be then fixed. They typically likes to fix poor highs and poor lows, and then they bounce, and then they consolidate a little bit, right? And that's kind of what you're looking for, is agreement that this is done and the auction is complete. Then they go here, and usually out of these consolidations, you can go long and look for the opposite levels on prior days or weeks, whatever you got next to you. So
I
poor
have a
high.
question.
Go ahead.
So is it mostly they're gonna bounce, or maybe if there's a different sort of trend during the day, is there a danger maybe they'll just kind of shoot through it?
Oh, they can, and we'll cover that. We'll cover that. I have a really good example to cover. Sometimes, how do you know that it's just going to be a sweep and not, a continuation, right? That's a good question. That's a super valid question. Especially if you have some major levels around. Let's say you left a poor low at, and I'm talking recently at like 50.45, you left a poor low, and right at 42.38 is a major level that we had. Well, that's a perfect ideal trap, right? Where it's like, okay, well, let's dip below, let's complete the auction, we trap some sellers, and then we reverse. And that's where you look for single prints. You're looking to see on that day that's forming, right? Let's say it's initial balance A and B period, and the B period left single prints right there. And you never come back to revisit, you're starting to look for a bounce. You're starting to look for long, because that continuation never went below. They did not confirm it that they want the prices lower, because the IB, let's say it's super wide initial balance at the bottom. Well, we know if the balance is wide and you're at the bottom of a key level, what are the odds that you're going to continue? I personally would like to play it long versus short, because initial balances that are wide rarely get broken, right? If it's an IB that's narrow, there's a high chance, right? But then if you look at the buying where it occurs at the key level of other time frame, and they're stepping in, you want to be careful shorting those poor highs, especially if they sweep the poor low, meaning they dip below it, right? Let's say they dip below this and they quickly reclaim it. That's a good sign that hey, we just wanted to fix this. Now that they fixed it, they're looking for potential long opportunities, right? In a trend, right? And how would you, measure that in terms of how do you trust it? Well, if let's say for 2 days you're printing B shape, no overlap in values, and this day here you're doing this in terms of value, you start overlapping, you have to be a little bit careful, right? And that occurred recently. You're paying attention to the context of the market, what is happening, how's the trend doing, and at what level are you at? If you're at a level where you're expecting other time frame participants to come in, and you have to think about, traps. When I look at the market and I put a plan in scenarios, I look at it, how can they mess up more people? And my goal is not to be in the group of those other people. How can I be on their side? I want to be friends with them. If I can be friends with them and I know this is a poor low and they sweep it and they reclaim, then they consolidate, that's a good good potential setup. But if they have a poor low, and let's say it's a B shape, and then they come in and let's say they auction to this POC and they're unable to find any value here, well, I could have shorted the lows here and I would have been the short, or I'm better off maybe taking a short position here and seeing first target here and keep a runner below to see if they continue. Shorting at the lows of the days is probably the worst thing you could do, because there's usually other time frame participants or somebody finds value and starts buying while you're trying to sell something. Right. So that's why I would let them auction, especially on these levels, higher. And I look for, many, whether it's POC imbalances or whatnot, to take short from higher level than the low of the day level. I rarely take shorts on these levels here. Okay. And I'll have an example, so you'll see it. Okay.
Awesome. Thank you.
So single prints is something that you guys want to get familiar with. There's many ways to call the single prints, right? Some call it completed auction. It's a selling tail when it occurs on the top of the candle. It's a buying tail. For instance, if it happens here, this would be the buying tail. If you had the A period, then we'll cover them in live. Failed auction, we just touched when you have more than 2 TPOs on the bottom or the top, that's called a failed auction, right? And that's a poor high or poor low. Okay. This concept here, you guys should keep this and check this occasionally. It's been happening a lot lately. If we break below IB, which is this line right here, and let's say this is the IB that we were looking at, we broke below it in D period, but what happened then? Well, we didn't close there, right? So if you look where you closed, right, look at the M period, right, or N period. So we failed the IB, and the price is most likely is going to go in the opposite direction. So if, let's say, Friday we tried to go below IB and we didn't close or spend 30 minutes below it, then you reclaimed it, high chance the next day goes opposite direction. And that's what this is. This occurs a lot of times. Okay. Any questions on components of market profile? If I was to give you a chart, would you know how to break down each one of these sectors, right? Find selling tail, find the value area, find the poor high, poor low. And also, if you have single prints in the middle of the chart, let's say this was single prints here, and you had more boxes on the top, let's say here, what is this here then?
Spike.
Could be a spike. It could be a single print. Spike only occurs in M period, right? When you have this, that's the breaking down 2 value areas. Let's say you had price here, and then we auction lower, and we left single prints in here, and then you have here. This should be called double distribution, right? And the single prints are separating that double distribution. That's important. Very, very, very important. One of my favorite setups to trade. If you break this zone, there's a high chance you're gonna go back to the bottom. If you crack this level, you're trading the bottom of that zone. So basically, you know how to trade it. Typically, when you have single prints like this, let's say you have a B shape that looks like this, and let's say you auction higher, and then when you come back here, this becomes potentially a good opportunity for long because they're gonna try to defend it. As long as the bulls don't lose this level, that means we're okay that we're going to try to trade now in the upper distribution. If the bulls lose this level, there's a high chance we go to the bottom of this and trade lower. We are accepting prices inside the lower distribution versus accepting prices in the upper distribution. Does that make sense to all? If the single prints are in the middle of the profile, it's dividing the day into 2 or sometimes 3, right? We've seen triple distribution days. If they occur in the middle of the chart, you want to pay attention to, as long as there are some TPOs, 3 or more TPOs above that single print. And I'll show you guys that on the chart itself. Any questions here? Does everybody understand the letters now, what they mean, how you guys can use it? Do you understand the terminology?
Yes.
Well, that doesn't.
Yes. I had a question about the 80% rule. Could you go over the 80%?
Yeah, we'll go over to 80. That's applicable for market profiling and volume profile, but we'll go over that.
Okay.
Hey, Shorty, I have a quick question. At the top and the bottom of a distribution, let's say. So I struggle with, like, when I'm at the top of one of those or the bottom, like, are they defending that? Am I expecting it to go above the top of the distribution or not? I don't know when.
Well,
I struggle with that.
In double distribution days?
Well, if I am in a double distribution, but when I get to the top or the bottom of either of those distributions, I'm not sure what I should be expecting. Should I be expecting it to hold? Like, do they defend that or not?
If they were happy, so you have to think about price acceptance, right? If they were happy trading in here, and let's say they crack inside here, you're turning bearish below this level where, this is your base start on the single prints in the uptrend. So if they're not able to hold this level, you're turning bearish here because they're most likely going to test the opposite extreme. And I'll give you a live example instead of drawing so you can see it.
Okay, thank you.
Shorty,
Yep.
in that instance, does it what she's asking, right? Does it make sense to then rely on footprints to make a decision to see what direction it may go?
I think footprints you use as a confirmation because it carries your volume, trade size, and aggression, right? Footprints are nothing more than an x-ray how we got in at a level, what are we doing at the key level, so are we absorbing, are we aggressively selling at the lows, or are we seeing bid at the bottom. That's how I use footprints. I don't use footprints isolated alone to get in or get out, if that makes sense. So I would use footprints. Let's say if we let me get to that live and then it might be easier. Okay, so in terms of setups in market profile, you see the first one is a double distributions. Then you have something called spike. I really like enjoying spikes because it makes it very, very binary to trade. Initial balance extensions, you have to be really, really good to trade that because, when you think about initial balance extension, how much time is focused on this trade when you're trading initial balance extensions? You're trading that first hour of data. So initial balance extensions have to be, it should not be your favorite setup, right? This one can carry a lot of traps for new traders. I've seen people on Twitter post initial balance, go with the flow. Well, initial balance, let's say, is the AB period. And let's say in C period, you auction above and you immediately fail inside initial balance. A lot of people would have been trapped based on that theory that just go with the flow and you break the IBH. You want to break the IBH, but you want that C period to hold above the A and B high. Okay. This one is tricky, and I don't recommend for newer people to rely too much on initial balance setup to trade it. But you want to know if you're above initial balance, low, for the purpose of confidence on the trend for that day. It doesn't necessarily mean you have to take that trade immediately as you break it in the C period, because most times they like to come back and verify it, and as long as they don't dip, that's good. So this one is not my go-to setup, but I use the information. I'm just trying to convey the message from this to make decisions for the rest of the setups. Does that make sense? Not my favorite setup here. Okay. All right, so double distribution. So market will provide information if price is being accepted or rejected. Any single prints negating that accepted or rejection will be shown via single prints, and that's kind of what I was trying to draw. When you think about double distribution, it's not the most confident auction that you have, because at one point you agree at lower prices and you're like, oh, never mind, we're going to go higher. Let's say we're having a double distribution trend day up. Well, once you break out of that bottom, let's say distribution, you're going to start auctioning higher. And let's say they're like, okay, well, we're going to take profits here. And now you're building a second distribution at the top. You're going to have a double distribution trend day up if you break out of that HVN on the top and you continue. If you reject there, right, there's a high chance once you go to those single prints that you're going to potentially go to the bottom distribution, and that's bearish, right? And that's what kind of, Free was alluding to. How do you trade that? How do you play it? If you look at this right here on this chart, where's the distribution here? Where's the two distributions?
At the initial balance in the value area up top.
Right here?
Oh, down by the initial balance is one distribution, and then where the POC is another. And above that, yeah, right there.
Okay.
And then down by the initial balance, that's another distribution area, I think.
Here.
Yes.
So this would be different, right? That I want to make sure you guys have a understanding of what this is. So here, this right here is the separation of the two values right here. Meaning we have value area high. This is one value here, and then below this you have value as well. Everybody agree? because what's separating the two distribution is the single prints right here. Okay. So if the price is trading above and we are unable to crack below this bottom of this level, right here, if you're not able to break below this, that means you're accepting the prices in this distribution. Once you crack this level, that becomes bearish. And let's say you go short here, you can definitely drive this all the way to the single prints. This is a buying tail on the bottom and a really aggressive selling tail at the top, right? So I would look to short this, right, and drive that to the bottom, which would be in this case 25 points, because they're no longer accepting the prices in the top distribution. They're going to be testing probably the extreme and where the single prints showed up on the bottom. So that's one view that you guys need to start looking for in terms of market profile and identifying where the single prints are. This is a selling tail, ST. This would be the buying tail, and this is just a single print separating the value for that intraday or week, month, whatever the time frame you're looking at to analyze the market. Does everybody understand this now? This is a powerful setup, guys. So please make sure that you're following along what I'm showing you before we get into a trading view, and I'll show you live.
So
So we're
that selling
shorting.
tail. Sorry, go ahead.
No, you go.
So that selling tail was end period then, I'm assuming.
End of period?
Yeah.
What do you mean?
Like the selling tail on the top is the last period.
The letter N. The letter N.
Yeah.
Well, we close right here, so I would assume there's end periods here.
Okay.
Right? Some of this is, and I'm pretty sure there's a little bit of maybe even M, but we can check. Irrelevant what period it is, but let's assume it's all J period, right? If this is the J period, that would make it a strong selling. But dependent, we opened here, right? So you have to kind of realize what the market's or this chart's telling you. If I opened here and I closed here, do you really think this is selling tail? Or is this a spike?
Spike?
That should be a spike.
That's a spike.
Most likely a spike from here to whatever that level, wherever it ends, right? That would be a spike. So we opened here and we closed here. That's different. If you opened here, right, and you closed here, then I would know that this is what selling tail, right? Most likely.
Yeah.
Tail.
Which are more common in the first period rather than the last, I think, unless it's like some crazy.
Well, last
volatility.
period is always spike. We treat it last period. We always treat the spike because we can't verify that, and we'll cover that here on next two slides on the spikes.
Gotcha.
Okay. So notice where the single prints exist, right? We have them on the tail, on the top. You have them in the middle, which is for this purpose of this double distribution. That's what we are after. This is where the value is separated. First distribution here, one, and below that you have second distribution. So you have them accepting prices here, and above this bullish. That means they are accepting prices higher. So as long as the bears or the bulls, I'm sorry, are able to defend this in this scenario, this level, we're bullish. We're bullish because we're looking for prices higher, right? If they crack this level, that means they're accepting prices in the bottom distribution. And typically they test the opposite. In this case, let's say 50-20, you would, for profit taking, I would know where the single prints are, and I'll probably trim here. Does that make sense?
Yes,
Yeah.
sir.
And you would set your stop basically around the other distribution.
That's correct.
If I was shorting that, right? Yeah.
That's correct. My stop loss would be probably a tick above this here.
Mm-hmm.
So if they really want to give, and it depends what that day is, forming. If I see, let's say the next day here is also the value area high is, let's say, a tick higher, maybe, you would put half a point.
Mm-hmm.
I would want to be maybe a little bit higher than that. So maybe I would put slightly above the value area. It just depends where that day is and where's the value being formed. But definitely I would put, it would be above this level, not inside this level, if that makes sense.
Yeah, for sure.
Yep. And usually what I do, and you guys seen me do this, you want to highlight this, draw a little box and highlight this, distribution or division of value. And you want to pay attention where that happens, right? Let me, I just did something here.
Shorty, if you don't, if you don't have the boxes on your TPO, how would you identify that?
I don't have boxes. What do you mean? Sorry.
Yeah, you know, like my TPO tool is pretty cruddy, and I only have the letters. So just like if I see the same letter,
Well, if you
and
see
that's
a
it.
single letter, if you don't have any
Yeah.
letters right next to it, that means there's two
That's
TPOs.
it.
That's not a single print.
Okay.
If you see
Okay.
letter H, let me see, where is this? If you see letter H, let's say letter H, and then a CH here. Let's say I'm just throwing stuff out, and then it's CH here. Well, that means the H period single prints are here. This is your division.
Thank you.
Okay. All right. So you want to highlight this area division. Once we come back retest, we're looking for long or short. So last night I was like, well, how do I help these people visualize it? Does anyone want to take a stab on what you're seeing? This is the latest data that you have. Didn't we had the levels. I'm just going to bring it up here for a second. We had levels that were in the 40 to 38 range right here, correct? From this day here, this is the one that you just saw on previous chart here. This is the same day here. Same identical day. I just drew a little zone there. You guys see it?
Yes.
Okay.
Yes.
So now pay attention to what happened, right? From here, when this day occurred, we opened here. We had strong buy side imbalance here, and the accepted price is higher. We closed at the high of the day. Then they went, they opened a little bit lower than the close. They went again, they dipped more and they bought more. Then they opened and they closed at the same level. Then we had the pullback, right? Where you open here and you closed right and tapped this level, right? Then they dipped below it to the key zone that we had. And I'm just trying to tell you what all goes into my head. 42.38 was a major level, and look where they bounced. They went below and they held. And there's few things in play here and few setups that come in mind. So you have the double distribution split where, let's see if they can defend this right here as a value here, right? Or are we going to be trading in the bottom, whatever that bottom is, right? I think it goes to 80, right? 49.80, 49.60s and below. They dipped here below, but what is special about this day here?
Looks like they were building
It's a-
value there.
Yeah. Mm-hmm.
It's a B shape at the bottom of a somewhat bottom of a range of a bottom of a
Okay.
consolidation period.
Somebody's going to nail it. Keep going.
Oh, there's only one single print at the bottom.
Ah, what does that indicate?
Yeah, it's
Strong.
Or low.
Yeah,
Strong low.
it's a
I don't know what you call it.
auction.
Poor low.
Poor low.
Poor low. So if it is a poor low,
yeah.
they like to be revisited. Somebody said earlier, and somebody asked a very good question. How do you know it will not break down? Well, let's talk about this example. We had a poor low, right? And this was, to me, it was perfect opportunity to trap people. What did they do with this poor low? They swept below it, and then look at what happens here.
Gobbled up the stop.
A nice tail, yeah.
Access low.
Access.
Mm-hmm.
Then you have buyers stepping in there saying, no, completed auction. There's no unfinished business here. So think about when I traded, go back, find this day. I said I'm long here. And you will see
I
that
remember.
my hits were between 38 and 42. And I said we can catch quite a bit of points from here. And we went here and we closed at 90. Don't think about the money, but think about the setup. 50 points on $50 per point. It's a lot of money in a single. A lot of you don't have discipline to hold it, nor should you hold it for 50 points. That's irrelevant. The key point that I want to make sure I wish they had a button for freaking deleting this. Easier. Is we swept the poor lows, poor highs get revisited. They did it. And then somebody said, how do you know? Well, this was a C period here. I believe, if I remember, and we'll check it live, this was C period. The B period came here. It was a really wide initial bounce. And I want to make sure you guys understand that. Do you see how wide this initial balance is? Roughly. How wide is this initial balance?
I mean, it's more than twice the size of the previous day.
This is abnormally high. This is close to 50 points. Which one has better odds of breaking? Initial balance that's wide or narrow?
Narrow.
Narrow.
Okay, now let's add the second piece of market generated information that you had. When you look at market profile or any chart, you have to look at the context. You have unfair high here. You have a finished auction here, right? You have the distribution that's splitting the value here. You had the first sigma that was sitting at 42 to 38. I believe it was 38.5. Don't quote me exact levels. We had major other time frame participants waiting for the price to get there. And then when they get there, they told you we are here. And we know they're here by looking at the single prints that showed up. And there's, I can't count. I can't see this, too tiny for me. Let's say 7 single prints here. That's pretty strong excess low, right? Just as a strong here for access high, right? That, they created. So this is where you're looking for opportunities to, let's say, go long. How would I have played this, right? When you think about this, how do you play the balance here? So this is the same day that I just showed you guys, identical day here, right? So now I'm zooming in from this. I'm zooming in on this right here, the 2 days. So we know that this zone is here. So keep that in mind. And now if you go here, a day prior information, we had a B shape, right? So that would be this day here. We had a B shape at a major level, week 3, sig 1. Everybody agrees so far. This is our poor low and prior day value area low as well now. So what did they do? How do you mess up the most people? Well, we fixed the poor low and we broke below the value area low. And now let me ask you guys a question. Why I have this slide on what is expected?
Responsive buyers.
Okay. And we're at the major level. Don't forget that we are at a almost 4-week sig 1, meaning standard deviation value area of the monthly. And what did they do? They gave people that wanted to short opportunity to go short below the previous day low here. And this is
their money.
Rockets mentioned it. Look below and go away from it. Because people that shorted here, now they're buying here. And they were just putting their money into my pocket.
Hey, Shorty, I have a question. So, when I turn on the extended session, 18 a.m. Eastern Time to 17, for some days there is no poor lows or poor highs. But then when I turn it off, but there is a lot of poor lows and poor highs are popping up. Like for one example, the April 19th, the low that we put in at there's a poor low, but then when I turn on the extended hours, there's no poor low. So
don't look at extended hours for poor lows, poor highs.
Okay.
You cannot, do not do that. You're determining poor lows, poor highs on RTH cash sessions.
Okay, cool. Thank you.
So now let's just, I want you guys to analyze this with me so that way, because this pattern repeats so much that even if you waited once a week, you would be okay and profitable for the week instead of staring at it for 5 days. Okay. So
That's another question I had. What's the time period that you are looking at these on? Is it a day, the whole session, or?
This is 1 day here. This is a daily session here. 1 day. So this is, I believe, This was May 2nd. We'll go on trading view here shortly. This was May 2nd or 3rd. We'll find out, but this is all one profile, one daily session. I'm looking at day to day because I would say a lot of us are intraday or scalpers on futures. Do I swing sometimes? Yes, right. But it's not normal to swing because you have to have a little bit of more capital to swing at, ES contract or NQ contract. Okay, so far everybody understands why, you have a sweep of a poor low, then you came back, you had the access low here, right? They swept that, they probably trapped a lot of short sellers here because the PD value area low, PDL is there. This was a perfect setup for for trapping. So you had the two TPOs, that's what I covered here. And the IB for that day, initial balance here, guys, 50 points. 50 points initial balance. And when it's 25 points, it's considered excessive. So what do you consider something that's twice that? Right. The odds of us breaking this would mean that you need everybody selling at the bottom, which happens to be unexpected behavior of a 3-week balance. Because remember, in bracketed markets, you're not expecting to see this. Selling below is unexpected, guys. You're expecting to see buyers come in. And let's see if that theory works, right? Once they open the C period, right? It was C period low, was 50.47. I took the retrade claim of poor low 42. My first entry was 38 because I saw the aggression on the footprint. Somebody said, where would I use footprints? Well, when I was looking, I even sent you guys a screenshot in the chat where I said, look at the order on the bid side. You can go back, somebody who's good at Discord, look for it. I highlighted, there's a massive order that just came. And when the order came in, I was able to get in. If you're just trading market profile and you're conservative, where's your entry? Look at the data here. This is your prior day POC, analyze it, right? So you have the value area. Remember the 68% from the chart we had. This is your value area high, value area low. So you went below here, and what did the price tell you? Do I accept or reject prices below?
You rejected.
Reject.
Okay. This is your teaching on 80%, so pay attention. If this is my value area high and this is my value area low, we dipped below this level here, PD value area low, and we reclaimed it. What is your next target?
PLC at least. Above.
PLC at least, which
Value.
is the zone that I have. That's your first PT. Your final target is here, value area high, which means 80% rule to the value area high. Why is it called 80% rule?
Happens 80% of the time.
It works 80% of the time, guys. So if you went long here, your first target, you can trim here, and you want to go back to the main chat and see where was my exit. Check the timestamp, and see if it was here. It was 54. Some of you guys want to catch more, but 12 points on the bounce for me, two contracts. I'll take that any time of the day. Did I have runners? Yes, you let the runners run. If they can run, you run. And then look what they did. They went to the value area high of the previous day. They peaked above it, and then they continued a little bit more, right? I'm just using the bars, right? So I'm able to see it easily. And then you look where they closed. They closed where? They closed above the previous day value area high and above the halfback of the prior day. So does that indicate bullish or bearish?
Very bullish because they also defended it.
Very bullish. They came back and they also did this right here, right on the prior day value area high. And they said, we want to go higher, right? And where did you guys see this concept of earlier, right? If you have price that's trading in here and they auction higher and then they come back, did you guys see this anywhere? Acceptance occurs here, as below is a rejection. Does this look identical? This was
Oh,
your
yeah.
previous day value area high. You went above and a quick retest, right? For intraday, that's pretty good. They gave you this on that day. If you missed all the opportunities, then you had some for scalping towards the end of the day. So let me go back to this and just continue so you guys can follow along. Once they open the C period, ideal entry for market profile was here. Oh man, I keep messing up with the drawing tool. Apologize. So once they peaked above this, right? This is your PDPOC zone here. Look, they went above it. They gave you a few retests. So let's say you took this PDPOC long here at 50.54. What's your stop loss?
Where the single print start?
Okay, so let's put them below single print. So that would mean, let's say you get 55. That's 8-point stop loss. 8 times 50 is how much?
450.
400.
400 is your
400.
risk. Okay, if I'm risking $400, how much do I have to make?
My view, at least
Twice
800.
as much.
Yeah.
Minimal, you want to be 2-to-1. Ideal, 3-to-1.
Mhm.
So if I'm catching 8 points risk right here, 2 times 18, 2 times 8 would be, I need 16 points in return. So from 50, what did we say? We said 55, right? Yeah, 55. So 63. So we need 71. Is that correct? 72, I'm sorry. 16, 72. So you're targeting somewhere in here to be very close to the value area high, and that would be good. That would be 2-to-1. So if you took a contract here, there's no reason why you cannot make this trade work. And you have to risk and accept your loss. A lot of you then would, as it's going down, and you don't need to buy here, guys. You don't need to buy here if you got into this trade. You take your loss and then you're evaluating to see, let's say if this, PD is going to hold, but that's irrelevant. Now you're targeting to see if you can get that, right? If you can catch 16 points here, or can you catch 24 points for 3-to-1? So 3 reward, your risk is here. So 8 points, 3 times 8, you're looking for 24 points from 55. Did you guys get it on this trade?
Yes, sir.
Oh yeah.
You got 3-to-1.
Yeah.
So, but you can only see this if you understand what you're looking for. A lot of you guys would fail at first, but once you repeat this pattern a lot and you're coming to these levels that I've never, seen since a month ago, you have to understand why the other time frame participants were. They were in this area, this was poor high, they swept it, they trapped. A lot of times poor highs, poor lows are executed via traps. And sometimes when you see that we are clean, we're continuing down and there's no overlap, then it's a problem. Another thing that happened here that should have given you a lot of heads up is the open. What happened at the open? Does that mean you want to try this? Because you're pretty good at it. That's why I'm asking you. Between this day and this day, what was the market telling you right out of the gate?
Well, it gapped up, and then as soon as it opened, it sold off. The A session to the B session just was a complete sell-off.
Correct. So a lot of you guys care about the end period. This was your end period. Let's say this drawing here, the close was your end period. So what Bean is telling you is that we opened right here. What does that mean for inventory? If we are closed here and we are trading at open here, what was the overnight?
We're long.
Yeah,
We're very long.
If the inventory is not long, what do I tell you to expect?
They need to bring it back into. They
The
need their money
opposite.
back, so they're going to drop it down.
What
That's
happens
before low again.
during the ETH, the pajama traders are not long. How do you shake out those guys?
You scare them.
You scare them, man.
Go the opposite direction.
And you break the previous day low. Do you know what they do? They start closing as quickly as they can, and they start selling.
How do we know? How do we know when they're net long?
Net long, I think I covered this, and I want to see your notes after this free, is if your end period where it says close.
You did, I know.
And, well, you have to write it down. If you don't write it down, then you're just as good as the person that doesn't remember it. If we are trading, if your close is at 100, right? And then ETH session, meaning 6 p.m. comes in and they start auctioning higher, that means inventory overnight is net long. Simple. I closed at 100 and now after hours we are here, that means they're not long. If you close at 100 and they're trading below this, that means inventory is not short. Does that make sense to everyone? It's fairly.
I'm sorry, Shorty. By not long, basically there's no inventory left. Is that what I'm understanding? Do I understand that correctly?
No, so when it's net long, that means they're buying their inventory in hopes the market's going higher. So they're positioning themselves and buying everything they can.
Got it.
So, and if the big boy wants your inventory, let's say they're targeting to go long too, well, they need to get it from you. So how do I get it from you is when we open, like we did here, it's called rebalancing of the inventory. We open and what did they do?
Push everything down.
Break the PL, scare the crap out of you. And what do people do when they're scared?
They start selling.
They become irrational and they start doing what the masses do. Oh my God, market's collapsing out of the 3-week balance. Sure it is. They took your inventory and then they basically put in a new high of the day.
It's crazy because they caused you to sell yours, which caused, but then when they start returning, that causes other people to close their positions, which ends up, making the buying even more.
But that becomes their inventory available at cheaper levels. Remember, we auction lower in search of what?
Buyers.
Yeah, so they're basically scaring you so they can get it at cheaper price. They don't want to buy here because they know they can get 55 points because they know human behavior. They know if they put few news out, right, and they scare you out of it, why not buy it at 42 versus 88? I mean, if you're spending $5 million on, let's say on order, that's a big, big difference. So this is a typical setup, right? You swept the pores and then you reclaim a key level and then you go off, right? So that in this setup here, when you think about this, when I talked about this, you covered double distribution, right? We talked about initial balance. It was wide, meaning that there was no extensions, right? Poor high, they typically get swept, and I play these sometimes isolated. What I mean by isolated is if we have a poor high left, and I'll explain it live. If we have a poor high left, they typically, when you have a poor high, when you have 2 TPOs, they auction away from it downwards. Okay, I'm looking to find where this stops to buy this for intraday or next day. When it's a poor high and low 45 days from now, market, nor do I care for it. That means there was no immediate need for them to come and fix it. And I do not care if they fix it 45 days after, or 30 or 20. A poor high, poor low, max is 3 to 4 days. Ideally, you want to fix it that same day or following day, the carry through. Okay, so if they have a poor high, you're looking for opportunity when they come back. They want to fix it. You're looking for an entry to come back and fix. Where would you first target be on a poor high, poor low play? If I'm looking to long this, what is my target if I go along here?
Poor high.
Poor high. It was poor high because it was not finished business. So if I get finished business here, do I really want to fight that? If there's trend, if it's strong, sure. But as a trader, I just want to take my piece of the pie and go away from it. I will look for the next opportunity once this is established that this is now support. So my first target is if you have a poor high, it would be here. If it's a poor low, let's say, and they basically had a poor low and then they dip, I'm looking for a shorting opportunity with poor low being my first target. First PT would be here. Can you guys visualize this, or am I drawing too much?
I can't.
I'm following.
Yeah, me either.
Okay, I'll give you guys charts here a second. So this is your double distribution split for this day that we talked about. This is where they rejected the prices lower, right? And then this was also major levels, and then they auctioned higher from there. Does everybody understand why I was very bullish of the 3-week balance instead of bearish, like majority on Twitter?
Oh yeah.
Yes, Shorty.
Oh yeah.
Okay. Next concept that I like to trade with and a setup that I look for is spikes. They're important because in the last, in the first hour, market generates a lot of volume. But also the last 30 minutes, there's a lot of participation that comes in, and the volume usually spikes in that period, especially at 350, right? So when the spike happens, in what period does that happen?
Is that the M period?
Yeah.
The end of the last 30
M
minutes.
as in Mary. Do not
Yeah.
confuse it with N as in Nancy. N as in Nancy does not measure the spike. We call it the M period spike because we don't have time to validate if that price is really accepted or not. If you spike, for instance, I'm giving you an example here. This was the day we traded. You see this is your initial balance high, and I would say you have a really bad poor low. Agree? So then they spiked here. You see the L period high is right here. So this is the start of the spike. And you see where the M period here is right here, is the base end. I don't care for when the end period ends. It doesn't matter. It's just TradingView shows it because the close. Cash session closes at 4:15. So the end period is only 15 minutes. So you do not care for end period. Besides, if you need to figure out, if you're a pajama trader or if you want to know inventory net long or short, then you look at the 4:15 close. Okay. If we open above this spike, or if we open in between and then we auction above the spike, is that bullish or bearish?
Bullish.
Okay. Can everybody follow?
Bullish.
In the last period, the M period made a new high from all the periods you had. There's your A, there's your B, C, D. And then you see at the L period, the last 30 minutes, this is your last 30 minutes here, they spiked. If the next day, the carry forward, if they open above here and they hold this level, that's extremely bullish. This is semi-bullish if they open in between here and they don't crack below this level. Most likely they're going to auction higher. If they open below 52, 57, 50 in this case, where the base started, that invalidates this spike, and it's saying, no, we don't like prices above. We're going to trade most likely where? Trick question, where is your target if they fail this 52, 57?
POC. Previous day POC.
Validated high.
Okay, anyone else?
Initial balance high.
So I caught all of you, almost like a fishnet, and I just
The bottom of M. The bottom of M, like Mary.
That's a really good example. If this is my poor low, and the next day I'm rejecting any prices here, and also happens to be IBH here. This is my IBH, and this is my IBL. I'm going to visit back just to show you the thinking that goes into my brain. Well, let's look at the bottom section that's highlighted on the bottom right.
Oh, yes, that one.
Okay.
Now we go here. Is this a failed IB auction then? They went above it, obviously, and the M spike, right? This means that, when you look at this 50, 40 to 52, 56, that's a 26 point. That's considered high range. 23 points to 25 is considered really high IB in ES. Okay. If that's true and you fall back inside and you reject this, then simply you're targeting 4 low, and IBL here would be your next target. Can you take profits at any of these levels that you guys mentioned? You can, but my goal is to teach you how to leave a runner. Runners make you rich. Here, when you guys see me, I made my profits on this, but my runners take me from 1,000 profit to, let's say, 2,100. But my risk is much better to manage now because I already made my 1,000.
Mm-hmm.
And a lot of you guys are focused immediately trimming all of it, right? And I'll give you a scenario that I do also with shares, right? Because we're going to talk about shares shortly. When I buy shares, let's say I buy 100 shares of Tesla at $100. Well, if that 100 costs me, let's say, I'm just throwing out $100,000. Well, if the stock goes and I recoup my initial investment, let's say doubles at 100%, what should I do? Well, I take my initial investment out. I would most likely sell half of it and keep the half and let it run, and then put a trailing somewhere in a quarter in between. So that way I can't lose my money. I'll still make money, but if there's runners, I'll let them run. I did that with Zscaler. I did it with a lot of shares that we've had, AMD, Google. A lot of them, I did the same concept. A lot of you guys get in with, full. You guys jump in the ocean sometimes, full size at certain targets. Let's say you jumped in short right here below, and you're like, man, 10 pack. And then 10 pack gets closed here. Well, the difference is if you know, and I just led you to it, right? If you study this and you understand the rules and the concepts, maybe you take 8 here. Let's say you take 8 here, and that's great profits, right? You'd be 5 points on 8 contract. That's money. But then the 2 contracts from 52 to 12, that's 12 points on 2 contracts. How much money is that? It would be almost like 1/3 of this that you did with 8. So you have to look at the picture. You have to look at the information being generated so you can trade properly and let the smaller size win you more money. If you need to put in $100,000 to make $10,000, that's not a good return. If I can put in minimal and then let them run, that's pretty good. Some people buy 150 contracts of SPY to make $2,000. To me, that's very risky, right? Because it's a first large capital out, proportion maybe to a size of your account, but make more with less. And here with spikes, I really enjoy trading them because they're really, really good. And there's bullish spike and bear spike. Can you guys visualize the bear spike, or I need to find an example?
I
You
could
can find an
visualize.
example, it'd be nice.
Okay. Basically, it's just vice versa. It's opposite, right? Let's say if this was the F period, and then the G period, or M period here came and broke here below, this would be the base start of the period of the bear side, and wherever that M ends, that would be the end of it, right? And then you would monitor to see where we open. Do we open above this, which would negate that bearishness? If we open in between, it's semi-bearish, right? And then if you open below here, right, I mean, that's really, really bearish. You're going below the PDL, right? And you're opening below it. Does that make sense? Is there anyone that's new? Because
Yeah.
you guys have seen this. They've been in the Discord. Anyone that's new that does not understand the spike? It's okay if you don't. Maybe I'm doing a bad job explaining.
Hey, Shorty, I've got the spike. I guess my question is, I always think about IB rejection as being same day or intraday. You're saying now it actually has value application the next day too. Is that only in relation to the spike, or would you see that as having value?
Always.
Okay, thank you.
Yeah, so the initial balance really sets the tone for that day, but you look at it the day prior, it can also be served as support and resistance. Like in this day, it would be really, really important that they don't crack this below 8. My lines are so bad, I'm sorry. below this 8-period high, which would be your IBH. So would I short this 52.57, or for them to fail below this, probably wait here and let them fail here and then drive it all the way down. So they are setups where I look at IBH, especially when it's wide. Because when it's a wide IBH, I don't expect you to break it higher. Your immediate, at least my immediate thinking is, were you serious about this IB break? So if you're serious, what should happen tomorrow on the wide IB break? If you broke it late in the M period on IBH and it's super wide balance, so this is the question to you, that means that you had some power here. You had some buyers. If you had buyers to break the IBH, what should you do on IBH tomorrow?
Should defend it.
You should defend it. So that's the instance I would pay attention. If it's a narrow IB, right? Let's say it's 10 points, 15 points, I don't care. But on the extremes, 25 points and you're breaking in a late period, and tomorrow you're auctioning, well, I want to make sure that you're, that you guys, what you agreed on day prior is still valid today. And if you fail, then I know the IB failed, and that was a trap, and most likely you're going to auction to the bottom of that IBL.
Got it. Thank you.
I wouldn't look for IB Monday to Friday. I could give a shit what they did on Monday IB and then comparing it to Friday. It doesn't matter to me. But when it's a wide Thursday to Friday, and a wide IB indicates what? Who participates when is there more participation or less?
More.
More. So if there's more participation and you're breaking out of it, I expect you, like you said, with more participation, I expect you to agree on this tomorrow. If you fail to agree, then we're just back in balance and you're going to go back to IBL. So that's why I care. Okay. Here's some rules for it. Initial balance, right? You guys know this by now. How can you tell if this is the one that I talked about, just to back up. I don't like trading initial balance in isolation alone. That's not my favorite setup. If we are in balance of like 3 days and then you're breaking initial balance, then I would take it, right? As long as that, 3-day value area high is not 2 points above, I would take it, right? If it's a peak above and fail, then I would short that IBH. But here's some rules, at least, that I think about when I'm trading IB, right? If you start single printing from IB, so let's say, we're talking about, A and B. I'm just gonna say that this is your balance here, A and B, and then the C period opens and C period just goes, right? Well, the C period never revisits this level, right? Let's say it comes close to this level right here, or taps IB, but it never cracks inside. That's most likely going to be a trend day. Typically, what I look for when you break IB, what is my first target that I always, about 99% of the time, I tell you, it forms a type of day. What is that type of day? Remember, we have IB 2x, you have IB 3x, right? If it breaks above 2x, 100% trend day. My first target on the breaks of IB is always what?
2x.
2x. I'm expecting you to take this range and double it. And that would be what type of day?
Green day.
If it's below 2x, what type of day it is? If it just taps between IB, if this is my IB and this is the 2x of the IB, and then we trade the rest of the day here, what type of day is that?
Extended typical?
That's correct. Or normal variation day. Means there's confidence higher. You're not that crazy. We're going to stay here, park it here. And tomorrow becomes very easy if this occurs, right? If this is my 2x of prior day IB and IBH is here, and let's say we open here, and then they lose this, whoever asked about IBH earlier, what is that telling you then? We open here, and then you auction and you dip below the IBH of prior day right here. So that normal variation they type is being rejected, and most likely
Yeah, the 80% rule.
the 80% rule would be in play. So
we
I
can
use-
treat this just like if it was over the high of the day. Same concept.
Same concept. If you think about the volume profile, the 4 opening types, remember those 8 slides that we have? We actually highlighted, PD value area high and the PDH, and the opening in between can be really, really prosperous for setups. I don't like opening in between because they can stay here and build value above it. And then they make a lot of traps here, right? If they open in here where they crack below and then they reclaim and then they proceed higher, break the 2x and continue. I don't like the openings in between value area high and previous day high, or PDL and value area low. Those are my least favorite opening places for the reason of the traps. And you have to be right, kind of open eye, awake, reading everything to make that right. So the setups wise, I am not big on taking IBH break immediately long here. If we do take a long, let it go. Let them see some C period. Let the C period finish. And then let C period ideally have a little bit of single prints there that stay there, where the D period leaves 2 C periods single. Why would that matter?
You're basically creating support above it. You're creating a gap, so a double distribution.
Exactly. Are you guys connecting the dots on the setups, how they work together? If they're able to do that, that would mean they're rejecting the values lower inside the IBH, and we're going to seek newer value higher. We're going to auction most likely higher. That would be the market telling you that at the time that it's building and creating and trading. No EMAs, no SMAs, none of that. Market is telling you we're not interested in lower prices. You guys following, or am I too fast?
Yes.
Yep.
Okay. This is the one that I just wanted to make sure that you have to pay attention to the IB. I don't trade it in isolation, but I use the IB to know how I can trade the rest of the day. It's very important that you guys pay attention to the balance of it. And I've given you guys, I believe, in the volume profile PowerPoint, the example was the lamp, if you guys recall. If you guys have a candle warmer in my house now, if you have a candle warmer that has a base that's super wide, what are the chances that my kid's gonna tip it over? Probably, minimal, but I trust my second child, so there's a chance. If the base of that lamp or candle warmer is narrow, what are the odds that my second child can tip that over and make a mess? Pretty high. There's no support there, right? As when we have the narrow IB, that indicates that there's what type of traders in the IB?
Short-term
Other time frame.
No, not other time frames. Short-term traders are trading narrow IBs, narrow value areas, because short-term traders look for what?
quick hits.
Wait,
Value.
Oh, I'm hitting you guys with every question you've
Oh.
and every question that's in a quiz I'm asking you.
Short-term traders trade in value.
They trade in value because they believe in fair price. Who trades outside of value?
Other time frame buyers.
Other time frame participants, right? We just talked about it. When the price dipped below that level, who stepped in?
My cousin.
Other time frames.
Your cousin.
he manages a lot of money.
Well, they find the opportunity when the price is below value. And right here, how do you know where the value is? Look at the green area. This was your division of value. This is your double distribution. That's why we highlighted. They dipped below. They had poor low. They dipped. They reclaim. And of course, you guys know where we are right now. Okay. So far, are you guys following at least the setups that I look for and how they're playing out? And I'm giving you basically a dump of double distributions, how I played this The spikes, the way I play them, initial balance extension, I do not play them isolated alone. You can, I don't. I use it to generate information about the day and the day types. Poor high, poor low. I will explain a little bit more in trading live here, or not trading live on the chart. There's no live right now. And then access low and access high is anyone that doesn't understand access low, access highs. Okay, and I'm not kidding
I could
about
use
that.
a refresher on it.
Okay, I'll go on the live charts, but I am giving you guys a quiz link that you guys are going to take after this. And I want to see how actually the distribution of the results is going to fare to the class. Because if the test brings back that you guys are on the bottom distribution of the scores, what does that tell you about the class? Was it accepted or rejected?
Rejected.
Rejected.
It's rejected. So I want to see if you guys are picking it up. I don't have to do it, but then maybe the way I'm teaching it is not clicking with some of you guys, and that's okay. We don't all learn the same. You can't ask, like, Einstein said, you can't ask an elephant to climb a tree. You cannot judge him on that. You can judge him on many other things, but not how to climb a tree, right? You leave that to the monkeys. So that's the purpose of this. I'm not trying to see, who's better, who's worse, but what do we need to change for you guys to think rationally, think setups? The things that you see repeat a lot. Do they have to repeat perfectly matching to what you saw 2 weeks before? No, that's not how markets work. They're going to give you a little twist and variation. You guys, most of you went to school. In college, a teacher would say, this is going to be on a test, and you come to a test, and it's like, what the fuck? You said that it's going to be like that, and it's nothing like that. I'm sure every one of you had the experience. Like, we have a test, we did this example, and then the test comes, and it's like, man, I have no idea that we ever talked about this. And then the professor goes over it, and you're like, oh, I see it now. Yes, that's true. Because it requires you to take the information and make your own decision. A lot of you want to take the information and then a little bit of guessing, a little bit of luck, the price too high, you start erasing the information that matters, and you bring in some information that's relevant to trading. And the best thing you can do is put the plan down, the key levels, what you're looking for, defend this level, I'm looking for long, fail below reclaim, I'm looking for long, or vice versa. And that helps you day to day plan. And then eventually, when you look at the log, if you're still writing one, I promise your brain will start picking these things up and you will become more profitable than not. Okay. All right. So here's your day that we just had, right? So I'm just this is exactly what we just had here. And if you guys look here, it happened a few times on these splits of distributions, and they work. I just love them. For me, the value division on single prints is really, really big, guys. And it happens more times than not, right? And more times than not, you can actually play it and see it work. For instance, right? If you guys look at here, right, we talked about this trading in this value area, HVN. So if I was to turn on VRVP, there's going to be a little bit of node if I was to zoom in here, right? On this day, you'll see that there's this right here. And that's mainly driven by this 2 days of action right here. And if you're able, I talked about this because I remember it when I said, we said if you're able to get in here, there's a high chance we're going to do what? Visit the highs, which we did, and we kind of closed above them, which I'm looking on daily profiles. Now the other time frame analysis come into picture to know what's happening. So the points that we talked about, right? It's for me, my eyes, I find, I don't know, I think there's a way to highlight this. Oh, here. Single prints, you can highlight them on the chart in most of the tools. So you see here, there's a single print, the one we talked about here. There's a single print right here that we talked about. And you see, for instance, on the bearish side, when we had this happened right here, actually, we had this level identified as well. When you open here, you close below, and then basically you opened, you had a gap down here, and then you closed above it. So immediately they were telling you they want to explore higher. And then what happened when they popped below this level? Did that happen? They went to the extreme of this one and they came back and now they're above it. So now when you look, what are you looking for on the top side? You guys, if you're not familiar with this level and you've been with me for, let's say, more than 3 weeks, there's a big problem. This was a big level on what? Do you guys remember this? April 15th?
Yeah.
It was
Sure.
It was a very big division, guys, in terms of auction, right? And I'll try to zoom out here, see how TradingView works on 2 hours with single days. Okay, there it goes. So I'm just looking at daily profiles. Most of the time I would zoom out. So now if you look, this is where the division of major values happening. I think it was like 55 something. So here, let's just say it's right here, 51, 53 and a half. So for this day here, you see that they agreed that they wanted to go higher. They auctioned much higher. They even auctioned, put a new all-time highs from there. So this right now is considered one value on the top, right? So if you go here, this is the value. And this is the single prints. This is the single prints that said we're going to go lower and break lower. And then you see here, right, they had some value all the way that led to the bottom of here of 63 and a half, which was also a monthly framing down. But now they're trying to crack back inside this value. If they're able to crack inside this value, right, I would target that we're most likely going to hit new all-time highs. Is there a potential for rejections, lower highs, lower lows? Of course. On the terms of auction, what they're targeting, if they can accept the prices go here, I would expect them Monday right out of the gate to go 84. Out of the 84, right? If you look here, you guys see this gap that we had? I want you to go above this gap or reject it and then come back here, but don't crack this level. Don't lose 53. If you can do that, then we're set up that we're going to go higher. If they come to 84 and then we crack this 53, what would that mean to you guys?
Just kidding. We're ready to go lower.
Yeah, this is a trap. We don't accept the price in here. We do not want to trade here. We believe the prices should be lower, and most likely you would target somewhere around, what is this, like 50, 30s. Okay. So now when you look at this on the multi-time frame analysis, so right, I'll just go here and zoom in. So how do you kind of trade this, right? We talked about this setup right here. You see that I would say Friday's profile looks a little weird. And I want to see how you guys would analyze it, right? So let's prepare for Monday or tonight if you guys are crazy. So what is this telling you? Here, I'm going to go on one tick so you guys can see full picture. All right. We opened, at 51, 53. So we did have a little bit of a gap, right? We gap down and we basically are above that. I'm not going to go into it, 51.27, and we did what we were expecting them to do, go to 53, and they closed above it. So now what is this day telling you here? Is this an extremely bullish day?
Yes.
It's a trap question.
You have an extension on the top, which is more selling you have on the top with poor low. Well, mine's a poor low. I think yours shows 2. I only have 1 on mine.
Yeah. Okay.
But I mean, it did gap up, so that's where it looks aggressive. But we're near that top. I mean, I'm torn on this one because to me, above 53 is bullish.
Correct.
Yet the top is showing that we could be.
1 second. I'll stop you there. Other time frame, you're bullish. Go on. Meaning on the higher time frames, you're looking for bullishness. But if you lose what, you're turning bearish.
53.
Okay.
Actually, 27, 26 would be the real bearish.
Oh, that would be really bearish. All right. What else do you guys see for this day that should be based on what the class, what we just did? What else do you see?
Pull low and
low.
Let me give you a clue here.
A wide IB.
Why?
And we broke the low. We broke the bottom of the IB,
What
but
about?
we didn't break the top.
That's correct. So would that be? I mean, we only spent. We have equal lows with C period, D period went below, but tiny little excess, right? So we failed to break lower, even though we attempted. I think we can all agree on that. Then the B period is doing what to A period?
Access high.
So think about this. We went
It's engulfing.
we went above the A period here. We went below the A period, and where did we close?
Well, buyers came in on the D period to push it up the rest of the day.
That's
for the
correct.
most part. But we're getting resistance up top near the D period, B period.
Okay. So what would you
So-
expect the next day if your IB is 40 points? What do we expect for Monday?
They're going to try to at least hit the IBH.
Yeah, they,
How do you reject the top again?
Unless they,
this
unless
is
they
where
gap
I'm,
up tonight.
yeah, I see either gap up or a collapse. There could be a retest down of the low IBL.
Okay, somebody asked me, when do I
continuation.
care about IB? Somebody asked me a question and I'm waiting to see if that person speaks up. If we break the IB, let's say we gap up above IB. Here's your scenario. Man, I don't know why this drawing is. I'm at some emails trading. Sorry, it just drives me crazy that I don't have free drawing. I have to draw like a square. So if we open tomorrow above IBH right here, IB was 40 points wide, 39 wide. Pretty wide, IB. Agree?
Yep.
What do I not want them to lose tomorrow?
IBL, IBH.
IBH. To IBH, I would wait. If they lose this level right here, which would be the A period high, because from the B period here, do you have any access?
It is excess.
It is access, exactly. So if they're able to, let's say if they open in between here and then they lose this A high, I would expect to do what?
rotate low.
All the way to the IBL.
I would target personally, I would target all the way up to here, 36.75. Could I leave some runners? What you're talking about, Bean? I know exactly where you're going with it. Trust me. Would I expect them to go all the way to 51.27 and fix this? There's a little bit of excess. It's a completed auction, but not like, hey, we're confident in this buying right here, right? There's no confidence there as much as there's confidence here, and we know that this level here was a major split that I just covered. And the value on other time frame that being said is key for him, 53.5. If that's his key for a major other time frame division, well then for me, for intraday, if they're able to lose that, if I want to catch 8 points, I'll catch 8 points. If I see that they break through that 53, then I'll let that sucker run as much as I can. With next target being 36, I would enjoy it all the way down. If they lose that, then you can put a trailing, put it, 10 points, 8 points higher. And, typically when you're trending down, you should not have 8-point bounces middle of the day. End of the day, different story, but not in the middle of the day. You should not go that far. Then you're just trailing and enjoying this. This day is telling you, yeah, we gap up, right? We had a major gap up here. And it's not a very confident buying in the gap here. If you look here, they defended that 51.27 that I think every one of you had on the chart. They came back to it and, not as aggressive, right? They're able to break that IB, but then on the top, they never cracked the initial IBH. So with the wide balance, tomorrow there's a high chance we do what in terms of open? If we don't open above, let's say they don't gap it up. Well, if they open it in between here and they're accepting the value of this day, what would you guys expect to see?
Retest.
Yeah, a test at least at the bottom of A, if not 27.
We could just range here and start building value above that. Remember the 53 level. Ideally,
Mhm.
they build value in this section. I would want them to build
Mhm.
value here.
Yeah.
If they start building value here, that means they're rejecting that key level from other time frame participants.
Mhm.
So if they crack this, then I know we're going to go all the way here. Would I expect retail to come back in here and start buying? Yes, because this was a division that we had from the single prints base spike. It was 51.27 to 53. So I would, if I'm, let's say I'm short here, I'm closing here a little bit sooner than, here. I would still treat this as a poor, for me, context, not books. Yeah, sorry, I can't get rid of this damn drawing. Context, this is still, for me, poor low. For me,
Shorty,
Shorty,
if we
poor low.
break this 26
Mhm.
and close below it on Monday, can we assume that we will hit the 50% of the week, the halfback at least?
Yes. 100%. 100%. So what he's talking about, so I'm just gonna change this to a weekly, right? If we go on a weekly now, let's hide the balance for a moment. So here's the balance that he's talking about. I think 3 TPO is good for the weekly. So here's our weekly time frame. And we are shifting higher, right? And I even guys asked you a question, which week is more bullish, this one or this one? Well, depends how you answered, right? And what you're thinking about. Here you open and you closed at the highs. Here you open and you went slightly above the open, but you dip below, right? And you dipped almost to the open of the prior week and you found buyers and they pushed it above your open. So it's two different setups. You open, found new buyers, right? You opened, you went below and you found what buyers? Was it new or existing buyers? Existing, because they're already here. They pushed the price from this open to close here. Then the seller stepped in and they basically formed a 3-week balance, right? Your balance being somewhere here. I think this one goes a little bit higher. And it goes up to here, right? So now you're able to see what is actually happening in this. So as long as they're holding this 53 level, there's a chance. There's a little bit of, I think it was J period, what was F period? F period also had some here on the weekly, and you're gonna take a wild guess where we reject it? On a tiny little single print. So now if they, let's say, open above the 66 and they're able to build value higher, right? I would target probably the next level to be somewhere around 201. Why 201?
No, we got single prints to 201 to 190.
I was hoping
And then
you have the prior week POC, you have the single prints here, starting all the way from the section here. So now let's think about what's a scenario that you should be looking for tomorrow. If we open tomorrow and we are holding this level, what is the first level you target?
Well, I mean, if we're going to include the single prints from there, we've got 75 to 77 is a single print zone from prior, and then we can hit 84.
This right here is fixed, right?
Okay, so then 84, I would say.
84 being, yes, okay. I know why you're saying 84, but okay. So you have the gap that was previously there, sure. Ultimately, you're gonna.
It's also a value high, I believe. It's a monthly value high.
Yeah, I'm just looking at what I'm seeing on this chart based on TPOs. I would target that we're gonna go 90, and then there will be a fight here to 201, right? They can spike this as quickly as possible from 90 here, or anywhere in between, there would be what? An imbalance where they came in and created this lower. So my target would be if you can open and don't dip below this, you have the IBH that we just talked about. You hold that level. Ultimately, for me, it's all about the 53. Can you hold this tomorrow? Are you able to hold this level tomorrow? If you are, that's great. And then was there any spikes that you guys saw on the daily? Was there any spikes here?
If you're referring to the M period, not really, no.
Oh, guys, there was no spikes. You should have answered that immediately because we closed with an IB and we closed in within the highs and the lows. It was a two-sided auction, basically. They were negotiating. Okay. So you hold this tomorrow, which matches also to the POC here. And this would be a pretty good long tomorrow to play. If I take this long, where do you guys get out?
Off 50. Are you long off 53s, you're saying?
Yeah, if I'm long in this zone here, right? It depends where we go, how we auction, right? But
You 62
Around
you
the
might
first
want to, because that's
single
what
print.
everybody comes in. Yeah.
this would be my first target. I trim a contract, let's say here, and then I see if they're able to eat up, they're probably gonna do something like this, and then we're looking to see, you know, how aggressive did they get? Did they leave any single prints? Did they absorb the seller? If they absorb this seller out of the gate, then ultimately you're auctioning all the way at 51.90. Does that make sense? Hopefully it does. Okay.
Yeah, it makes sense to me.
Yeah, it does.
Then if you look at that, for instance, if you look at this on a monthly profile, there's something really interesting on the monthly. You have to give it a second, and I'm gonna take a quick water break. Okay. So far, we are only, you know, May is only 5 days in, but it's giving you something. What is it?
Any single prints.
All right, let's go here. Let's look at double distribution. Find this. Where is it?
Right there, the single prints.
Yeah, right there in the middle.
Okay. So for current month, they're telling you what?
They're trading on the upper distribution of the both.
Okay. So of the current month, we are trading above the upper distribution. So where do you become really bearish is, would this be the level?
Yeah.
So,
Underneath that.
yeah, underneath that, that means you're accepting different prices. So free, this is what you asked. This is what I'm giving you. If you're able to break below this, that means you're no longer interested in trading in the upper distribution, that you're interested in trading in the bottom.
I see it.
Does that make sense to everyone?
Nice 80 points.
Yes.
Okay. And from here, if I was to trade this, right, depends, you know, who you are. If you're intraday, right, could you take this for 14 points here and close it? Yeah. If you have the ability to hold some stuff, could you not go all the way to this level right here? Well, sorry.
Yeah.
Could you not do this? Yeah, that would be the ideal scenario. And then you would have, I wouldn't look to initiate much transactions in this in here, but you would target somewhere around 55-ish. And then if you look at this, right, let's just add a piece of point on detail here. Let's add the midpoint here. Where's your monthly half back here for month of April?
Wow.
Do you guys see how big this 55 is?
Yep.
It's very, very important that we find value above here. Let's say that, you know, they decide to do what we just talked about. They find some buyers, they absorb this access right here. We know 5190 has a split. We would look to see how do they react to this 206? Do they go above it? There is some skinny bellies that we had right here, right? Not a lot, but there's some. And then there's also some far back single prints here. But then pay attention to monthly profiles at the top. What is it telling you?
Oh, poor high. Poor high.
There's a poor high here, and that came in up, and we actually auctioned higher in ETH, untested, I believe, 33 level, if I'm correct. We went somewhere here, 32 and 33. So right now you have a poor high that hasn't been fixed. And what a better opportunity to maybe set up some traps here coming up, right? In this area, if they can go 206, then you're potentially going to hit this. I would say high odds you're going to put in a new high. And if you think about it in terms of profiles, you know, lower high, you crack this level here. Remember the 63 level? That was our framing down level. And now you're inside of it, right above it. So you're really in what? Are we in a trend or a balance? We are printing a 3-month balance right now, right? And you see here, right, 5106 should be fairly important. That was the fair price that they built over time. It should be current halfback period as well. So if they want to make us happy, let's say, for us to maybe understand it, if they want to reject this, and what do you see in between here? Like when you look at the volume, there a lot of volume here?
No.
It's not very good. No.
And then go here, right? Wouldn't that be the best idea? Tomorrow, give people some bearishness, which you could definitely short it, right? But then you know that they also created a really, really important zone here.
Yeah. But they want to fake people out. They could run it to 18.
Oh, dude, 18 would be 18 would be nice.
Yeah, I'm neutral until I see some of these levels get hit.
They get hit a lot. I think they work pretty well. So do you guys understand?
Yeah, looks like a good prediction.
If you're new, did you learn anything from this class of market profile? Should have picked up quite a bit.
Absolutely.
I'm, you know, a few months in, and I still learned.
Okay. And I would say market profile, it's once it clicks, you will not know why, when, where. You will just see your curve on your equity. You know, it starts looking like this. That's how you know you hit it. Okay. On the spikes, right? Let me see if I think we had a spike the day prior or not too long ago. I want to make sure that if we find a bear spike.
You had a bear spike
Like
back in April 30th.
Yeah, look where I'm at. That was right there.
It's massive.
All right, so you guys said that you wanted to look at bullish and bearish. You know, you're confused what was going on. So here's that day, right? On the 30th, you had the A and B, you had the poor high here, and then they cracked below the IB, and then they really, really confirmed it, right? They kept going, they started building value, they explored lower, right? And then came in the L period low, right? And this is where the bear spike started, right? So if you click right here, this is your base bear start, right? Base start spike. Okay, and then it went all the way down to this level, not the end period. It went all the way down here. Okay, so I'm just gonna go back from here. I'm gonna split it. Okay, so if this is our base spike, daily. Yeah. Okay, so one right here. What happens the next day? This is the next day. What happened? Where did they open in relationship to the spike?
In the middle of it.
Is that bullish or bearish?
Bullish.
You have to think before you speak.
They opened below the spike, right? So it's bearish.
I mean, they open below the spike, guys. If this is my spike and it's right here, they open below the spike. This is, remember the graphic. If you open in here It's what?
Semi-bullish.
Okay. If you open here, what is this equal to? You reject the spike, meaning you're not agreeing in this price. If you open below, it's bearish. Most likely you're going to continue, and then they did. Then you see what happens here, right? They went below, they had the poor low, they swept more late shorts, right? And from here, you had opportunities to actually go long, right? So your base spike got rejected and revisited, 2 days afterwards. And then since then, you see that they still continue higher. Does that make sense on the base, on the bearish base?
Yeah.
Okay. So TPO versus footprint, right? TPO is volume, right? It has nothing to do with order flow. When you look at TPO market profile, I use it to find the setups that we just talked about, division of separation, to find access highs, access lows, find the poor highs, poor lows, which you can also do on footprints, correct? Buying tails, selling tails, those are important because you can play off of them and know who's stepping into the, in the trading with you or against you. Are you guys understanding the difference? I use footprints to see where are the orders coming in or those levels that I identified on market profile. If this is my level, for instance, look at this day right here. What is this? April 30th. This was what? Did they split the value here?
Like a double distribution.
There was a lot of emotional selling. They went below. And then when we gapped up here, where did they come in D period?
Tested it.
They tested it and then they said, hey, yeah, I think we want to go higher, right? So the same thing was in this area that we were sitting, right, for some time, right? We traded there, we got rejected, and now they, they came back and said, hey, let's go higher. So right now I can't be bearish till, we crack below this 53, and then most likely you go here to this level. Once you lose the bottom of this right here, which was like 18, I believe, on the monthly, things change, right? Market is evolving, and 18 is the new level for bears to crack through. Does that make sense?
Oh, are you still feeling like the 42 or the 36 you're saying though, as levels if we break 53?
If you break 53, you're going to the bottom of this low balance that they created.
Oh, so we're going to 26, you think?
Yeah, most likely we hit 26.
All right.
Okay. On the poor highs, when you're trading poor highs, right? Typically, let me see if I can find one. Okay, here's one. So here's one poor high. What is this? April 23rd. Okay, here's poor high. All right, so this was the poor high that we had here, right here. And you see how we went above, and there's one checkbox for your potential short. What is that checkbox the next day?
– 80% roll, right?
Okay, so this is our the days that I'm highlighting. You see where the A period starts? That's the next day. Poor high starts for this day is right here for April 23rd is right here.
Oh, okay.
Okay, is everyone following? This is our poor high. And I said, you look for sweeps about poor high, and then there's checklists. So you just want to make sure that you have something. What is a number one item that's telling you, hey, there's a high chance you might get it?
We fell back in below.
What happened in the A period? I said, always pay attention to A and B period access.
We got an extension.
Yes.
Okay. You had access in the A period, and in the notes, it said access in A and B typically 78% of the time does what?
Seek lower.
They hold.
They hold.
So
That's the high of the day.
let's see. I think I wrote it somewhere here. See it? They hold 78% of the time. So then you see the A and B low here had also what? What's the concept they had here between A
Or
and B?
low, a poor low.
They had a poor
Basically.
The poor low.
Okay. So now think about it. This is a tricky question, and everybody might have a different answer, right? And then I'll ask you, if you took this short right here, how do you manage your stop loss? I'm only giving you 2 days of data. Okay, I'm giving you between this and this. I'm trying to just give you that so you don't see the rest here. Okay, I think I succeeded there.
You're coming in on the C period.
Yep, this is the C period, right? You cracked it. How do you play this? How do you short this poor high that you had?
I guess it kind of depends on how much do I have of the C period before I make a decision.
Okay, well, you could
If
wait
it's
the
the
C period to finish.
retest of, if it's the retest of I would put it above the C period.
Okay,
Or the middle of the IB, the halfback.
okay.
I would say E.
I would say ultimately the top of the A period.
Okay, so if you
That's
take
it.
top of the A period, you might be nervous at some point.
That's a long risk.
I mean, I would not do it.
I
I mean, that's a lot of points you're giving up, 12 points. You could, right? If you're confident, you could place that and you most likely it would work out. But realistically, if you want, you could play the B period high, or sometimes when you have
golden
A
pocket.
and B, right? And you know where the 50% of the I and B is, right? Could you not play the 50% of the initial balance?
Mhm.
Let me see if it's gonna work. Okay, maybe it will. So 50%, I'm just gonna use fibs. If the initial 50% is here, 51.17, then if you crack this, there's a high chance you're gonna go to the extreme high. Could you put it somewhere here? That would be 5 points, and you would need 10 points to make it work. I'm just giving you scenarios.
Yeah, that's probably easier to manage.
Yeah, so, and then let's say you didn't catch this poor high crack here once they set it up. This one here is actually probably better on I and J rejection than it is to crack it here on the momentum breakout, because what they did here is they broke this, they auctioned, they broke it, and they came back, and then they gave you a pretty good target, right, that you can play here, because this is where they started creating value. When you see where they went, I mean, the L period became very close to this bottom. So 2 ways you could have played it. You could have played it here and taken, half off of that IB and put a stop loss there, or on a retest here and put a, stop loss. If you get in at 12, 5 points, you got to catch 10 points from here. So you'll be looking something like, oh, it's so big. So let's say you played something like this and we got in at 12. So you would need somewhere, for 2P, maybe somewhere around here. If you wanted 3, you're looking at somewhere around here. It's just, again, doable. That's the sweep of poor high, and typically they go from poor high, and they usually come back to fix this. And then you see how they, I guess, did it here. It was pretty. Here's this opened where in relationship to the prior day. This was our poor high. Where did they open?
Above.
Yeah, they opened above. Ideally, if you wanted for a long opportunity, the retest of poor high, which is your preference, right? So if they open, let's say somewhere here, right, inside the value, and I had this area here identified, well, can you see the scenario what I would like to play?
I would short that. Break at the high and break your value low. There's the
Okay.
value
And then,
high.
If this
The
was,
range between those two areas.
let's say that they never went here, all I'm saying is
Oh.
that they opened here. I'm giving you scenarios based on the poor high, how to play it. This is our poor high, and they open here and they auction to this level. What could you do?
You could go long off the
Go
same
long
trend,
there.
off the top with a stop loss below the bottom.
Look at
Yeah,
that.
like that. Mhm.
Wouldn't this be pretty much the ideal scenario?
Yeah.
And isn't that kind
Yeah.
of what they did? Go back to Wednesday, April 22nd.
That's funny. Yeah.
They went that, they dipped, reclaimed, poop. They went back and they fixed what?
The poor high.
They made sure it's 100% fixed because, you know, you open above.
Yeah.
That doesn't mean fixing, that means gapping. Here, they fixed it here. They said, okay, we check out. And then, of course, the double distribution that you had did a
Mhm.
lot of work for it. They dipped below, they left a poor low here. And now when you think about it, they left a poor low here. And where did they open here? They open here, and what did they do?
Fixed it.
Fixed it, right?
Huh.
It works more times than not, but the hardest part, and a lot, how do I put this and be nice? A lot of you want to put in an hour a day into this. And I'm not saying I'm better than you by no means, but you want to have the same understanding of how it works a month later. There's things that I might be better than you guys, but there's a lot of things that you're better than me too. Right? Not only trading, but everything else. If you're a doctor, I can't, like, I don't know what to tell you, right? Like, you know, Dr. Luz, he's a doctor, he's an optometrist. Should I be giving Luz, can Luz give me a 1 hour overview of how to check eyes and I go become a doctor and make a living off of it? There's no fucking way. A lot of you guys come in and you want to learn this and you see it the next day, like, man, I failed on a trade. And you judge your whole trading based on the one time it didn't work. I mean, trading, you have to have a full year of trades of the setup and see if that setup is successful. Some of you come in and you want to learn a new language, new setups, new everything. And like, oh man, it really doesn't work. It's not for me. That's fine. Fine by me. But you're going to do that for the rest of your trading career. You're going to look for some, you know, magic ball that's going to tell you long or short with minimal risk. And that does not exist. There are trades I take based on the setups and they don't work. Yeah, they don't work. I have to accept that loss I took on is not going to work. I'm going to lose that money. I'm willing to lose it. A lot of you guys think that you're never going to lose money in trading. It's about minimizing those losses and letting your winning ones actually go above. That's when you're going to start turning the corner a little bit. And the setups that we went over today, if you just start searching for them, just like we did 5-10 minutes, look for it and go to the setup and see which one checks off, right? Intraday, you set up a poor high, look for an opportunity. Where do you go, right? For instance, here, like you have a poor high, right? Let's open it up. Here's your poor high. You have a poor high here. They didn't come back and fix it immediately. What about the next day? What did they do? Nope. No fixing on it. Of course, now you know that they gapped above it. There was no fixing, right? There was no even hope that they're gonna fix it here. And I even talked about this before, but it has to stay in your memory, not mine. What is the probability that it's gonna get fixed higher on a D shape or a B or on a B or up or a P shape when you have a poor high or poor low? Which one carries the highest probability of fixing?
The P shape?
Yeah.
I think so.
If you're in an uptrend and it's a P shape and your P shape is unfinished, yeah, I agree with Free.
Okay. If you have a P shape, let's say here, this is good. I have a P shape and I closed here. I liquidated the longs. I closed here, and this is my poor high.
Mm,
Do I have strong odds here?
not as strong.
Not as strong. Let's say I have a D shape, which is less volatility. Remember, P shapes means extensions. B shapes, lowercase b, means extensions. If I have a perfect distribution on D shape, and this one has a poor high, and we close here, what are the odds that I'm going to fix this? How much do I have to?
Yeah, that's more.
It's higher.
Yeah, I would say higher too.
Yeah, I don't have to go much higher. So if you have a D shape with a poor high and poor low, let's say you have excess low and a poor high, put your money that you're going to fix it the next day on a poor high. Does that make sense?
Yeah,
Yeah.
because the D shape is like a range trading.
Always a range day. There's a lot of short-term participants in D shapes. It doesn't take much for a big boy to put in 3,000 contracts. I showed it to you in footprints. You see a 3,000 contract order and price respects it. So if it's a D shape, it doesn't take much for them to go here and fix it. D shapes carry more probabilities on fixing poor highs, poor lows, especially if you have a D shapes that's, let's say, slightly skewed. Maybe it looks like this, like, you know, a little bit of excess low and a poor high. High chance you fix this. So you have to spend time with the charts, and you have to think about acceptance, rejection, probabilities of what you're talking about. How wide's the IB here versus there, right? Like you, for instance, look at this day, which was a Friday, right? You opened on the bottom, right? You opened in the A periods, right? And you see how they almost set up a pioneer range here, which is pretty rare. I haven't seen one maybe in a while now. Guys, remember what a pioneer range is?
Yeah, it's the open range for a period.
If the A period sets the full range for the day, that's called pioneer range, and you're not going to break that. Most of the time, 0%.
So that would be D.
Say it again.
That would be D shape.
Well, usually they trade in between, and it becomes a extra wide typical day.
Gotcha.
And you basically auction in between, and then the close of that matters, right? So now if you think about this one, here you had a poor high. This is a really good setup. So if it's a poor high and you have what on the bottom?
A heck of a tail.
You have a heck of a tail. Okay. The bears would need to go below where to be successful?
End of that A.
End of the A. And then when you think about this, I'm just looking at this. I'm not basing it any levels right here or whatnot, right? Where they might go, where they bounce. Let's say I have footprints up and I have this and this. How would I know to go long anywhere here? So we could probably check on Monday live. How would I know that maybe there's buyers here? A period's A period, right? I don't have any distinction between A period and market profile.
Mm-hmm.
You guys agree? I can't make a difference where I go on first box or second box in A period. I know the open is here, which is okay, important, right? If you open there and you crack it the next day, so this could be a level 5110. That's the only information I have. How else can I find where to bounce here?
I mean, you could just choose to go long. If once you break it, you could just put a go long above where the B session starts.
That's called buying at the right time. Meaning, remember that V-shaped thing that we talked about? Where do you buy shares? Do you buy them here or here? What he's suggesting is are you guys following?
Yeah.
You break below.
Yes.
You fail. I like break below and fails or reclaims. They break below and they reclaim, and you have a stop buy. And
Good confirmation.
What is it that I would target then?
The poor high.
Yeah, the poor
The
high.
volume node.
This is the poor high setup, guys. This is, I would target this 51.46. So 22 points here. And if you got in long here, What's your stop loss?
Below the spike of that, aren't that day? Yeah.
Done that.
Yeah, right there.
Who doesn't like 4-1?
I'll take it any day.
And how difficult is this setup?
Yeah, that's good money.
Yeah, when you explain it like this, it makes
You
it.
actually have time. You have a lot of time on that setup.
Dude,
It's
you
an
can.
easy one.
So think about it. I'm not trying to tell you trade every setup. Become good at poor highs in these setups where you have access low and a poor high. Trade literally fucking that setup for the rest of your life. Go back 3 months, see how many times they occurred. Or opposite, where you have a access high and a poor low. Be aware of the trend you're in, right? Don't go against it, right? But if you're trending higher and they left a poor high and they have a massive access low, you have a really good opportunity, guys, to catch this. Like this setup can make a living, one setup, this one here. But you have to look for it. You have to recognize it with your own eyes without me having to explain it to you that it's happening. Otherwise, you should hire me to cook, also date your wife or husband. Like I cannot. You have to start seeing this and spending time on the charts, right? I'm giving you how it works, and it works. How else could I find ideal entry here? 1875. I guarantee you I could find this exact level where they bounced. How else would I do it?
You use your footprints.
I would use the footprints, and I don't have to catch the bottom exact spot. Ideal entry is what Bean said. Why is it ideal? Somebody else mentioned because it gives you confidence that they have no interest in trading below.
Yeah, break below and fan.
Claimed it. They said no, and this becomes massive access here, right? And then they have access high here, right? And it just repeats. Another thing you could do here is use some fibs, right? Like use this, and you look, they never even came. They probably came to 23.6. If I was to guess here, this is 23.6. 23.6. They came right to it and bounced. If you're bouncing at 23.6 of the access, what does that tell you about the potential trend from there? Low, weak or strong?
Bullish.
Very bullish.
Strong.
Right. And then let's say you add context of more data. I can give you this day here. And I give you this day here. What could you make out of this now?
Well, where the B session, I don't know if it's a B session or not on that day there.
Okay.
Once you clean up that excess, it could be where it bounces, or is that about where pretty close?
So you're talking about this.
Yeah.
Yeah, they come in, they dip below. Perfect. On this, they also notice that the value area is right here, or what?
VOCs or
the values are
so it's value
here,
area.
balance, right? You went above and closed it, and then look at this, right? Then you can also use something like, let's say this here. I just grabbed 2 days balance here. Okay, well, let's see, where does that bounce? This one bounced where? Perfectly on that. It came in and said, no, we have zero interest on that. And then what Bean's talking about, this access high, they got absorbed, and we one day closed above it. And now when they're coming back, look at this. They closed above, this is a pure trap. This is ideal trap for shorts here. And then they proceeded another, I would say, another P-shaped profile that's elongated with single prints. This day seemed already bearish enough, if you guys can follow between the two profiles, right? So you had a poor high here, and then you had a completed auction with access high, correct? You opened here, and then you closed, but then look at your 2 days. Let's say if I was to draw this as a 2-day balance, right here. I'm just gonna change this to 68 and not extend. Okay, well, here's our 2-day balance between these 2 days. It's between these two levels right here. You open on lower end of it, and then what happens?
Almost hit the POC. Interject.
Came back and you said, fair price has to be below your A and B period here. If you guys look, your A and B period came back. You had a poor high here, and then you had a little bit of excess, and they absorbed that excess, and then they continued.
In the B period, after that finished, then it actually looked like you were going to have a pioneer day.
Yeah. I mean, you did have a pioneer day until this D period said, oh. But pioneer days usually carry a wide balance.
Okay.
It's really rare to find it. I mean, it's almost like a 4-leaf clover, honestly, to find a pioneer range. And then, I mean, I don't know. To me, it makes sense when I look at this stuff, guys, because here's your, here's your A and B period IBL. And look what happens here.
Yeah.
Are you guys seeing what I'm implying? Let me see if I can not split it. Let's see. What did they do shortly after that?
They tested the bottom of the IBL and failed.
Okay. And now what did they do currently?
They tested it and drove it up.
From the top. So they flipped. So if you want to, if you want to agree on something, they're going to have to defend this gap area, whatever that monthly level showed. I think it was somewhere here. 18 or something like that. The market speaks to you, and it takes time for you to pick up this language, guys. Don't be so hard on yourself. You can do it in a month. You cannot do it in a month, maybe 2, maybe 6. Because your brain, it's yours, and how you perceive and learn and how you apply it. This is great when you do the analysis post to recognize in the future. I can tell you the best setups after the fact that occurred. That's the easy part. But reading this live and making these decisions at the time with your own capital, emotions get triggered. Right? You put in, a couple of $100 or a few $1,000s on the line. You're like, man, your palms start sweating a little bit. Especially if you're oversizing and not believing in compounding rules of everything. You will not grow rich immediately from this. But let's say you make $500 a day for 30 days. That's probably more than you're making at your W-2 right now. But sometimes you're up $500 and you guys want 1,000. To me, as a new trader, I don't get that. Like, I don't know how to get it. Go to your boss and tell him, hey, I worked my shift for 8 hours and let's say I get paid $50 an hour and I worked 8 hours, and tell him I want another $400 for the day because I worked hard. Just ask him a crazy question. Hey man, for today, give me another $400.
And being a new hire, yeah.
Be a new hire, be like, man, I worked hard. I had this, what's that thing called when you come in first? They do, I don't know if I forgot the name. Where they bring you up to speed about the job.
There's an orientation.
The training.
Like you're doing orientation, you're like, man, I did hard. I paid attention. Can you give me extra $400 for today?
I paid attention.
Like, I mean, most people would think you're crazy. You're gonna lose a job shortly afterwards. And a lot of you guys don't treat it like that. You treat it like more, oh man, I'm just gonna trade more. No, man, you found that one setup, you executed, you did great on that poor high revisit. You're done. You just log off, man. Log off, call it a day, and the next day you have to analyze it, set up that play again. If it works, great. If it doesn't, have the B set up. And if those two don't work, then you log off. You lost 2 trades in a row. That's my, typically my rule is if I fuck up 2 times, 3 times, and typically you guys will hear me, I'm gonna log off, go away for a little bit, And then I reassess. I basically look at the charts blank as I'm looking at them now, and I make my assessment. What am I missing? What did I miss, and how do I get aligned to them? Them meaning majority of the market. Okay.
That makes sense. Good rule.
Any questions so far on market profile? So, the next steps for a lot of newer people is you have to spend some time on looking at, post a chart, ask questions. None of the members here that, that learned market profile did it overnight, or learned volume profile, right? Overnight. Footprints. You can't learn this overnight. Doesn't matter what you take, what drugs you have, you're not going to do it.
I got a question. With the TPO, I mean, the Secrets of a Pit Boss is fairly decent for some of this stuff.
Oh, yeah.
I haven't read it all. I've read part of it, but I mean, are you getting a lot of this stuff for the tapes, or what is it that you really help you with the TPOs? What other sources?
For me, honestly, I would say it's the Peters Myers class that you guys will be exposed to it, the audio tapes. It's that, and then honestly spending a lot of time with this and determining the price. Where are they finding value? For instance, I go back and I reset my charts a lot. And obviously, this is the chart that I'm going to start off for tomorrow, which is blank. I will look to see and break it down into the format that it makes sense, right? This was previous value inside this big value. If they're able to crack this, then where did they go? Like, what is the market telling me? On monthlies, revisit it, go back if you can in time and look at it, right? Analyze the data from previous to current, right? We were in a 3-week balance. We didn't break as aggressively as we should have on Friday. We really needed to fly on Friday. We needed to go probably a little bit higher to gain some confidence on the retest, but we didn't. We came in here, right, and we rejected. My level was 68.5, if you guys remember. I was really, really like, man, if you can crack that, I'm okay then. I'll believe in you guys. But they struggled a lot. So if they can't hold that 53, let's say tomorrow, I'm able to distinguish that they are rejecting any value to the upside, trading in this top distribution that we've been in for, I guess, since, what is this, March 6th, that they have no interest and no new buyers to go here. They're probably going to be looking for cheaper discounts. And this was only just a look above and fail. Because just like they trapped a lot of people here on the short, they're trapping the late buyers in this area. And you see, for instance, here you had 1, 2, 3, 4 days you were trading in this area here, and you went lower from it.
Yeah, that's why I kind of feel just neutral until something more happens.
Yeah, so we need to see, tomorrow, where do we open? Are we opening inside the value or above the value? And how do we respond to the extremes tomorrow is going to be super telling. Like if we're at the extreme of the prior day value area high and we don't like it, we get some aggressive selling. You know what time it is. You crack that 53, well, target 27. And we can meet tonight again, probably meet 8:45. I have to go for, if you guys, I think there's an Easter for Orthodox today. I'm not really good with religions, but one of my friends celebrates it. So we're going to head over there to their house. There now, but I say tonight, let's finish I know this class went a little bit over on market profile, but finish the stock and do the market prep tonight at 8:45.
That'd be great.
So
that sounds good.
But I would say, how do you put this together and get better? I think the best thing you would do is look at the stuff that we did today and identify those things on the charts and see what the plan we prepared tonight matches to what you have and the levels that you identified. Start on monthly profiles, go to weeklies, look at the dailies, identify the setups that we talked about, right? Visiting poor highs, poor lows. Is there access low, access high? Is there any double distribution splitting, and where do you find that value? And what do they have to hold, or you become bearish or bullish, whatever the scenario is? identify those points and put a plan. Put like a little. You guys see me drawing these crazy arrows and setups. Like, what are you looking for? Like, show me what you're looking for, and then get some feedback. I mean, you have 200 traders here that trade the same setups, guys. So I suggest that you spend 30 minutes between now and 3 o'clock and prepare yourself for tomorrow. And then if you see something that let's say you didn't see something I saw, that becomes a learning curve. Oh, I thought about this, but not this piece. Let me add it. And that's the only way you're going to get better with market profile, is applying what you know, and what you don't know, you're building up on it.
Are we still doing the stock
Alright,
scan?
that seems good.
I have to get going because I have to travel 45 minutes to see the friend. But I say tonight, 8:45, the first thing we do in 15 minutes is the stock scan.
Okay, 8:45 tonight. All right.
8:45 tonight, we'll meet for that.
So why did you say
Alright,
between
thanks,
now
Shorty.
and
Have fun.
between now and why did you say spend between now and 3 p.m.? Is that time sensitive, or is it just before the next market opens, the night session, or?
I just think you have 30 minutes laying around instead of being.
Oh, any 30 minutes. Yeah. Okay. Okay.
Yeah.
I thought you meant before the market opens. I'm not trading
Well,
the
I
night.
think
but
you wanna. I'm just saying, while the information is fresh in your head, you want to go back and look at the profiles, look what you're looking for, build a plan before I build it, so you can compare what you're doing and what we are doing, all of us and myself, and see how does it line up between your knowledge and our knowledge, and how you would treat it.
That's a great idea. Okay.
Okay. All right, guys, I got to get going. I got to get ready, and I will see you guys 8:45. We'll finish the stock scan, and then we'll talk about the weekly prep.
Have fun. Thank you, Shorty.
All right,
Thank you so much, man.
Thank you. See you later.
Thanks, Shorty.
Bye, everybody.
Take care.